And I say thanks for the things you have done for me. Things so undeserved, yet you came to prove your love for me. The voices of a million angels could not express my gratitude. All that I am and ever hope to be, I owe it all to thee. To God be the glory. To God be the glory. To God be the glory for the things He has done with His blood. He has saved me, and with His power He has raised me. To God be the glory for the things He has done. So let me live my life and let it be pleasing, Lord, to Thee. And should I gain any praise, let it go to Calvary. With His blood He has saved me, and with His power He has raised me. To God be the glory for the things He has done. To God be the glory. To God be the glory. To God be the glory for the things He has done with His blood. He has saved me, and with His power He has raised me. To God be the glory for the things He has done, for the things He has done.
Many opportunities come our way daily. The opportunity to tell our loved ones a kind word. The opportunity to turn the other cheek to quell a quarrel. The opportunity to change our future by investing in today. The opportunity to change someone's life by giving more than we take. The opportunity to say a softer word that will turn wrath into peace. The opportunity to spread good news rather than viralize every unfortunate situation. the opportunity to give a helping hand first rather than creating a Kodak moment. The disciples were called and straightway followed Jesus to become fishers of men. Opportunity grasped. The 4 friends who could not get into the house because of the crowd took an unconventional route and experienced healing for their friends. Opportunity grasped. The woman with the issue of blood just touched the hem of Jesus' garment and experienced a life-changing miracle. Opportunity grasped. What will we do with the opportunities that present themselves in our lives? Will we let them slip away, or will we seize the moment and experience life-changing outcomes? Can we bow our heads? Almighty God, creator of our universe, we look to you for direction and counsel. Without you, Lord, our lives are empty and hollow. Hallowed be your name, and great is your faithfulness. Morning by morning, many new mercies we see. We give you thanks for the opportunity of life, a cherished possession that we could not exchange for anything else. We crave your presence today, and we crave your direction and leading. May our speakers be clear and precise, and our topics enlightening. May our audience be attentive and engaged, and may we say at the end, it was good for us to have been here. We take the opportunity to celebrate the lives of those who were with us last year but are no longer with us today. We laud and honor their contributions to the development of the industry and the roles they played in our various plans. Continue to teach us to number our days and lay hold on eternal life, working for rewards that will last through our lifetime. Be with us today as we give you thanks. In Jesus' name, amen.
Everybody, let's welcome Sarah to the team. Here's the company handbook.
Thank you. Welcome, Sarah.
Life moves fast. Be prepared with Sagicor. Learn more at sagicor.com.
Good morning, good morning, good morning. Let me just start by thanking Charmaine Rankin, the Pension Administration Manager of EBA Limited. Thank you for that invocation, Charmaine. I noticed you prayed for everyone. You didn't pray that the MC shoes don't burn her, but I know it was on your mind. Andrea can sing. Yeah. You know, when she came back down, she can't sing, man, clap her again. Woo! I thought to myself, God, you know what blessings you bestow, because if I could sing like Andrea, I would have both say bad. And I both say already. So welcome, 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 everybody. The people online, I seen you. Are you there? Please put some fire, although we're having bushfires. So put some small fires. Let us know that you're there. Send us a hello. Everybody wave to the people online. We're not hungry. Wave! It's amazing. It's so beautiful to see all the faces out. This is the first face-to-face pension seminar that we've had in, 3 years? Wow, clap yourselves again. You hail up the people at your table. You never hail them up good. Willard, you never hail up good. Turn to the person beside you. Tell them morning. How you do? I'm glad for see you. You know what has happened since the pandemic? I think that wearing masks and quarantine caused our faces to come back to. Because you realize that since COVID, everybody get more good looking. Them get good looking. Some people, you say, me never know say I saw you good looking. Don't everybody get good looking. Everybody hair grow. Everybody, sometimes we need a little quarantine for come back to. Night dew make we get old. So I'd like to also extend a special welcome to the directors of the Sagicor PIF Limited, Dr. the Honorable R. Danny Williams, who extends his apologies because you know he would normally have been here. Mr. Chris Zaka, Mr. Zaka, so people call you Mr. Zaka. Elaine Robinson from University of the West Indies, Andrew Williams from Jamalco, and Errol Mackenzie. Mr. Mackenzie, long time I don't see you. Is he here? He soon come. So today we have, and all our online viewers, I am encouraging you please to stay through the day. Today we're big hearing presentations on the economic review. We're going to be hearing about the Data Protection Act. When we leave here with a mini MBA. So you can write up that you have a little mini MBA. So you have to stay focused. And we're going to introduce at this time a gentleman who is known by all as Mark Chisholm, Chief Revenue Officer, Insurance, and President and CEO, Sagicor Life of the Cayman Islands, with the official welcome. Now, as he comes here, he would normally be known as Chizzy, but with this title, he has to have an accent. So welcome, Chizzy.
Good morning, everyone. Rochelle, I'm not good looking. And the growth of the hair that you mentioned, I don't know, COVID did something different to me. So let me be clear on that. Ladies and gentlemen, good morning. I am here to represent the Honorable Dr. R. Danny Williams. Again, he apologized for not being here because this is one of the events that he represents himself as the chairman of the PIF Fund. Master of Ceremony, Rochelle Cameron, the beautiful. Mr. Christopher Zaka, the cost-cutting boss. Mr. Peter Meledo, I'm talking about the overhead, sir, not the, I'm talking about, right. Mr. Peter Meledo, the chairman of Sagicor Group Jamaica. Mr. Willard Brown, longest title, Chief Technology and Insurance Operations Officer, Sagicor Group. Donette Scarlett, Senior Vice President, Group Treasury and Asset Management, Sagicor Group. Mrs. Latoya Mayu Kerr, General Manager and Vice President, Employee Benefits Administrators Limited. Mrs. Nikki Leorani, Vice President, Employee Benefits, which is the Revenue, Vice President of the Revenue Division. Special welcome to our keynote speaker, Mr. Gregory A. Fisher, Managing Director and Head of Emerging Markets, Fixed Income Sales, Jefferies Group. Trustees, and most importantly, the trustees who believes in us, welcome. The management and the team members, also welcome and good morning. Everyone are welcome to the Sagicor Annual Pool Investment Seminar. I hope you are doing well, brimming with enthusiasm for the day ahead, which is a day that we're going to be as concise as possible. Thank you very much for joining us, for those face-to-face and those who are online. I'm happy to have the opportunity to join this forum. However, as a part of the knowledge sharing process today, we update you trustees on the performance of the fund over the last past year and looking forward for 2023. Before I proceed, let me take this opportunity to observe a moment of silence for one of our trustees who passed away since our last seminar. Our longest serving trustees, Mr. Clinton Lewis, a moment for Mr. Lewis of 1 minute. Thank you. Mr. Lewis passed on March 8th this year. He served as the Trust Secretary of the CWJ Pension Plan and a trustee for the Jamaica Deposit Insurance Pension Plan, the National Workers Union Plan, past trustee of Jamaica Public Service, DB Plan, and the UA, where he served as chairman up to his passing. We will surely miss Mr. Lewis, and thanks for the service that any of the other trustees that has passed for their members' work done over the years and advance in the pension industry. The annual PAF seminar is an important calendar event for Sagicor, as it forms an instrumental part of how we maintain and strengthen our relationship with our key stakeholders and bridge the gap between us and your members, whose retirement funds you have entrusted in us, and we take this responsibility very seriously. In your role as trustees, you also need to you also have a tremendous responsibility to oversee the pension portfolio on behalf of the members and to ensure their best possible outcomes for their future. Thank you for what you do and your significant contribution to the process. I'd like to take this opportunity to say a special thank you to Mr. Dennis Morris for his decade of service, wisdom, and significant contribution as a director of the PIF board. Mr. Morris has stepped down from the PIF board, and over the next few weeks, we'll be taking steps to appoint a new director from among our pension trustees. I also want to thank the entire PIF board of directors for their contribution. Special commendations from Mrs. Elaine Robinson and Mr. Andrew Williams, trustees, who dedicate their time and expertise on the board representing the interests of all pension funds. With the guidance of our capable component and experienced team, we want your members to know that Sagicor remains their trusted and sage partner on their financial journey. We look forward to serving you for the years to come to ensure that our members' retirement years are some of their best. Sagicor will always be here to support you and your members as we strive to take the best investment choices we can and to ensure security and stability of our pension funds and most prosperous future for everyone entrusted to us. Thanks once again for joining us. Please enjoy the program, enjoy the rest of the day, and the lunch and the breakfast conversation was really nice, right? Right? Where are the ladies that I was talking to? Okay, good. Show your hands. Thank you very much.
Chizai, you've represented well. Please give him another round of applause. To all our attendees online, I know sometimes we don't want to turn on our cameras, but just in case you never brush your hair yet or fix up your teeth quick, man. Put on like a lipstick, put on your pearl, fix up your hair, turn on your cameras so you can really participate. And you know when your cameras are on, you get different types of prizes. So please turn on your cameras. So today the theme is meeting the moment, seizing opportunities for growth. And what better time for this seminar, because this is a learning day for us. How many of us in here are trustees? So on a raise on a hand, so unafraid. Trustee! How many of you are pension administrators in your organizations from HR? Hey! Members of retirement schemes, are you here? You never bother come. Hey! I'm representing for you. So, you know, we've had a very troubling year in the financial sector, so Sagicor has that much more work to do because some of the money ran away faster than you're saying. But, so you know that the members of our pension plans are expecting even more of us. So it's so important that we are here, we are participating because our role, the significance of it, we're seeing it even more and more. And you know, recently I go to a lot of funerals, I'm getting to that age. And I attended a funeral, big funeral, because you know, COVID finished now, so people come out in them big hat and so. And as we're there, I noted just different groups of women. It was a nice gentleman that had passed away, but different groups of little families that cried. Some cried, ooh! Some cried, ooh! But there's different groups around the place. And my aunt that was with me, she's very naughty. So every time our group starts crying, she says things like, black pepper, sage, watch thyme over there, scallion. So I'm saying, Auntie, what is that about? She said, you don't see the spice rack is here. Because you know when you have more than one spouse, the name, Spice. So the spice rack was there, all in their glory. I don't know how that pension share up. Well, the gentleman who is chairman of Sagicor Group Jamaica, who has the awesome job of leading this amazing organization, ladies and gentlemen, put your hands together for Mr. Peter Melhedo.
Thank you, Rochelle. As we were saying at the table, a difficult segue to come on after a remark like that. I want you to know I'm exceptionally unspicy. I'm very plain vanilla. But I think we can observe all protocol since Mark did such a good job, and we want to get to the meat of the matter. But I would like to say a special hi to all the trustees, administrators, and indeed members who may be here. Also want to acknowledge Gregory. Gregory is a great friend of Jamaica. In fact, he's kind of an honorary Jamaican. And I really look forward to his remarks today. And then, of course, Team Sagicor, who are here in numbers. So let me first start by saying thank you to all our trustees. For today's seminar is really about you and your continued confidence in our company. Sagicor is a financial institution. It is today because of the support from you, our clients, and the faith that you've put in us to protect your financial assets through this journey. There is no question that the world economy, after an extended period, and it was really lovely in hindsight, of growth, is now characterized by uncommon volatility, first with the pandemic, followed by the challenges of inflation and geopolitical conflict. So meeting the moment and seizing opportunities for growth, which is our theme, is indeed apt for today's sessions. One thing I think the past few years has taught us at Sagicor, and perhaps in other spheres of our life, is that there is indeed opportunity in every challenge. As a company, we need to remain open and curious for new ideas from both the outside environment and also from within, from our talented people that we have. This seminar, in my view, represents one such opportunity for us to listen keenly to what you have to say. We will not have fulfilled the purpose of today if we do not elicit your views and get your feedback on what really matters to you as fiduciaries. We must also continue to be transparent with and accessible to you. This is a hallmark of all of our dealings, and while other elements may be subject to change, this one is not. You may have noticed, hopefully have noticed, innovation is also top of our agenda, and I hope you are pleased with some of our recent initiatives, all aimed at making doing business with Sagicor easier, simpler, and more personal. These are not easy times to be a pension manager, nor a trustee for that matter, as economic headwinds and geopolitical uncertainties continue to buffet markets. And I'm sure Greg will tell us a lot about what's happening in the world. However, I do want to put on record my congratulations to the Sagicor team for the work they have put in to ensure our trustees and members are served. It is an awesome responsibility. The first time I just became chairman, I think one of my first functions was this event. And I came up on the stage and I looked out at everybody and I thought, my gosh, this is really an awesome responsibility. And we treat it as that 100% of the time. So thank you once again for your confidence in us and for choosing Sagicor as your trusted financial partner. I really hope we have an interactive and spicy day today and have a productive time together. Thank you very much.
Thank you very much. Can we give another round of applause to Mr. Melhedo? So the chairman spoke about the innovation at Sagicor. You know, the innovation. I see in the people, hey, Monica, I see you. Claudette. Claudette Wave. Caron Anderson. Caron, we see you. So we talked about the innovation. Now, on your program, you notice there's a QR code at the back. Nice. So, you know, when you scan over the QR code, you're able to review all the reports today. Talk about innovation. Scan. Anybody here from Cable and Wireless Pension Fund? My original trustee role. I noticed some people not scanning. We have Wi-Fi in here if you don't have any credit. You're not scanning. So at this time, I'd like to welcome Mr. Christopher Zaka, who is the president and CEO of Sagicor Group. Welcome, Mr. Zaka.
Good morning. Special welcome, Greg. Really looking forward, and we've known each other for so long. Great to see you again. The reason why we're here, trustees and company reps, welcome, and thank you very much for continuing to support us. My Sagicor family, big up yourselves. Give me a wave and a clap now, man. And Chisholm, please stay off of the hairstyle remarks now, man, please, from now on. Yes. Folks, it's always a great occasion, but today, back fully face-to-face is an even more special occasion. I mean, we've gone through a lot, continue to go through a lot, but it is really amazing to me to be here sharing live in person with all of you. Let's give ourselves a round of applause, please. This event is extremely important to us, and I personally look forward to it every year. And we haven't missed a year despite COVID. We've done it online, we've done it hybrid, etc. It gives us an opportunity at Sagicor to fully update you, the trustees, on the performance of the funds and share with you developments and industry events. And thank you, as I said, thank you so much for turning out in your numbers. And I look forward, as the chairman said, to an active two-way discussion today. We truly value this interaction as you act as the bridge between us at Sagicor and the thousands of members. And again, thank you. Here at Sagicor, we understand the tremendous responsibility we hold and the trust that has been placed in us to manage your pension funds. Essentially, the future of so many Jamaicans. Currently, as of December last year, the size of our pension assets was around $212 billion. Our pension membership currently has 47,000 members, with an additional 11,000 receiving pension payments monthly. Sagicor remains by far the largest pension fund manager in Jamaica, and I want to applaud the team for their tremendous work they have done as they continue to deliver the best services to you. Even as we get back to normal, quotation marks, following the very challenging years of COVID, we continue, however, to grapple with global economic uncertainties due to the ongoing geopolitical uncertainties. As your trusted pension fund manager, we have remained agile and responsive to the various challenges, mitigating as best as possible major fallouts to safeguard your retirement funds. And we remain committed to ensuring your members' retirement funds are secure and that when the time comes, they can count on us. Protecting your members' funds is the only main priority for us. And I want to assure you that even amidst these challenges that we face, the best interests of your clients is our focus. Over the years, our pooled pension funds have maintained a track record of having strong returns, and I'm confident that we will ride out this wave of uncertainty, and very stable and productive days are ahead of us. As a group, we continue to make changes to effect greater efficiencies, streamline our business, and strengthen our operations with the ultimate goal of deepening our focus on our clients, transforming the way we do business, as well as developing our team. We are client-centric. Everything we do is based on what our clients want. Willard Brown, who most, if not all of you, would know, as our former executive vice president of our employee benefits division, was appointed last year, October, as the group chief technology and insurance operations officer. Willard now has direct responsibility for improving the operations of Sagicor Life and leading our entire group's digital transformation. Willard, stand up. Give him a round of applause. Former EVP of our individual life division, Mark Chisholm, is now the Chief Revenue Officer for insurance and has strategic oversight for the group's insurance portfolios. This move will help us to deliver greater benefits to our clients through the development of one unified sales team across all our insurance divisions. Mark, stand, and congratulations. With innovation at the core of our digitalization agenda, I'm happy to share one of our latest developments. Our new facial recognition technology to confirm proof of life for pensioners. Groundbreaking. We will be phasing out the manual tedium that required pensioners to visit a justice of the peace annually and have a physical form signed. And in a couple months, we have had 1,000 of our pensioners signing up to do facial recognition. Right, Latoya? This innovation was done in partnership with the Sagicor Innovation Lab at UTech. And I want to congratulate Latoya Mayhew-Carr and her team who led the process, and our Vice President of Innovation, Andrew Burke, who supported the team. Thank you all for this tremendous job you have done. Folks, now more than ever, we must use technology to our advantage to better support our clients and our business. This year, our major focus is to assist our clients, not our major focus generally, but in pensions, one of them is to assist our clients to comply with the impending Data Protection Act, which will take effect on December 1st this year. As a group, we want to ensure that we are 100% compliant with the Act and that all our stakeholders are also on board. As we move forward this year, I want to once again reassure you that we remain a very strong group with a resilient pool pension fund. Thank you for your confidence in us and for entrusting us with this responsibility. We don't take it lightly. We do not take it lightly. We look forward to a long, fruitful, and rewarding relationship and hope you will find today's proceedings informative and valuable. Please enjoy the rest of the day, and thank you.
We're here on the route with the runners. Good people, man. Of course, not even a stadium, this is so much people.
3 years we don't see this. You can believe that? 91 million.
Come on! 91 million!
500.
$91 million winner now, man.
Setting the goal for 75 million and raising 91 million. I think that's absolutely awesome. Love it, love it.
We need our money, Dad.
Absolutely.
This is so good, a really good initiative.
Yeah.
Jamaica is the greatest. Say that for me. Greatest.
I'm really happy that I'm able to come out and support the cause for the University Hospital and the Edna Manley College of the Visual and Performing Arts.
25 years, that's a long time.
Yeah.
The legacy is about so many people over the last 25 years who have contributed so much and who have really are the legacy of Sagicor Sigma Run.
The Sigma Run is something is much bigger than who we are right now. It's a person, it's about the collective, it's about the group that we have here in Jamaica, it's about children, it's about education, it's about future.
This is now an iconic event for Kingston, and I think it can get even bigger.
Can you imagine if you have a Sigma Run with 50,000 people running, the race would last a day.
We want to leave the world so much better than we found it, and this is a way that we can do it.
Let me say thanks to Sagicor for putting on this wonderful event.
We want to thank Jamaica for coming out, for celebrating with us, for participating with us, for running, walking and wheeling for the children of Jamaica.
Big up Sagicor, changing people's lives one person at a time over the years, and we love that, we support that.
Thanks everybody, it's great to be outside, great to see you all.
Wow, that is just vibes you up here. And thank you to all of you. Many of your organizations were a big part of the participation in the Sigma Run. Who participated? Who ran? Walked? Same thing. You never see me? You saw me on the video? Huh? No, I'm actually an elite athlete. So my time isn't timed with the other people, because I'm an elite athlete. So I finished long time, I ate my breakfast. You never see me, Willard? You never see me? But it win. So, $91.85 million raised for the UE Pediatric Wing and the Edna Manley College of the Visual and Performing Arts. No man, this deserves big clap. Over your head clap. Woo! And you know what? It just reminds us what we can do as a people and how we can care for each other and how we can show up, just like we've showed up today. So for those of us who decided to come very early, there was a gentleman that you could not beat to get to the Pegasus. His name is Edward Samuda. He was the first person in person for this, our first face-to-face. Where Edward there? You're gonna get a prize. And who? Oh, this is nice. Ed, you're gonna get prize on stage. Come for the prize. It's what you're getting. Oh my gosh, the basket looks lovely, Edward. And we had a gentleman who was the first to arrive online. Mark Clark, where are you? Mr. Mark Clark. We're gonna get Mr. Clark's prize to him. If we don't get it to him, I'm gonna eat the things in there for you. And I'll post and let you know how they taste. Ed, this is Ed's happy face. Give Ed a round of applause. So as you can see, we have several prizes today, and today is going to be very interactive. For the persons online, please continue to stay online. June, I see you. Nordell, how you doing? Keisha Forrest, good to see you. Ray Gregory, you're looking nice. So at this time, it gives me such great pleasure to introduce our keynote speaker for today, Gregory Fisher, and I'll just ask you to listen to his intro. Mr. Gregory Fisher, welcome.
Gregory A. Fisher, Managing Director, Jefferies, Head of Emerging Markets, Fixed Income Sales. Gregory Fisher has served in the securities business for over 30 years. Currently a managing director at Jefferies, he joined that firm in November 2015 as head of emerging markets fixed income sales wealth management division. Prior to joining Jefferies, Gregory worked at Oppenheimer and Company Inc., also as a managing director. He joined Oppenheimer in 2005, where he was instrumental in the creation of a new Oppenheimer and Company Inc. branch, Atlanta International, with its focus on the Caribbean and Central American businesses. Gregory was a senior managing director at Bear Stearns & Company before moving to Oppenheimer. As a senior managing director at Bear Stearns, he was also in charge of sales and trading for firms in the Caribbean and Central America.
Good morning, everybody. That was a first for me, being introduced virtually like that. The only thing is, it's not been 30 years, it's 40 years, but who's counting? I want to thank you all for having me here, Sagicor for inviting me to this pooled investment fund pension during these important and challenging times. I've been coming down to Jamaica for many, many, many decades, and Sagicor is just not a longtime client of mine, but close friends for many of you over 25 plus years. And for me, that's really important, and I take that to my heart. All other protocols acknowledged. Before I begin my remarks this morning, and I'm going to talk very generally about what I think is going on in the world, I just need to make sure for my lawyers at Jefferies in New York that I let you know that these are my own opinions, and they may or may not agree with those of Jefferies LLC. So, after more than 15 years of near zero interest rates, from my perspective, it's a difficult transition for any investor to make that jump to a higher rate environment without fear and pain. So just take that in for a second. I mean, we've had a zero rate environment going back more than 15 years. And now to get higher rates, there is fear and there is pain. However, in all my years in doing this, it's my opinion that the era of free money was really the anomaly, not what we're going through today. We have seen zero rates now really since, and right after the Great Recession. That's a very, very long time. Inflation and higher rates are all part of a normalized market cycle. But a normal cycle that has been eerily absent given all the contemporary issues in memory emanating from the financial crisis to the pandemic. So with the cross currents that all of us have gone through, and those that could possibly pop up at any given time, from the ongoing issues with the war of Ukraine to global political uncertainty that we're seeing, to most recently you see a bank in the United States fail, the SVB fiasco, makes this transition to a normalized interest rate cycle even more challenging. In other words, it's my opinion that we really are living through history here. I think that when you look at the pandemic, that was the first pandemic in my lifetime, first one in a century. And what we're going through here is really uncharted waters. Given the fact that rates have propelled from near zero level to the higher levels today, making money in the markets are now, as far as making money easily, are now in the rearview mirror and have quickly been replaced with the potential to making investment mistakes that have far more serious ramifications than they might have years ago during the free money era. Finally, given these rapid changes in the markets. Investment mistakes can happen ever so quickly as well. So before I try to guide you with some of my opinions as to where assets should be positioned, it's important to look at the current macroeconomic picture as well as take a look at some of the historical patterns when it comes to cycles that are normalizing. The global markets seem to be in a current state of utter confusion. Will the Fed hike next week 25 basis points? Will they be brazen enough to go 50 basis points? Some people are predicting that they may not hike at all because of obviously recent mitigating circumstances. Will there be a forthcoming recession? Will there be a soft landing if there is a recession? Will there be a hard landing? Will the US economy slow down? Or are we actually on the cusp of a new bull market? These are all good and timely questions that need to be answered or at least examined. My own answers to that question that I just posed, all those questions, are rather simplistic. It's my belief that we are now in the midst of a recessionary bear market cycle. Over the years, when I see stocks rally in a torrid fashion, only to be sold off in following trading sessions, or when I see yields gap up 80 basis points in a day, only to ebb lower the next day, I view volatility as a normalized bear market cycle. History has taught me that since the mid-1980s, when I first started in this business, that there are three distinct phases of a bear market cycle. The first leg is initial drop-off in stocks, and we saw this over the summer of last year. The second leg is what I refer to as the reflective bounce in the markets. We saw this in the fall. The third leg and the final leg of a bear market is usually the most long-winded and the most painful, and that's earnings erosion. It takes a while for analysts and corporations to ratchet their earnings lower as slower growth comes into the market. So I believe that if you add intense volatility into this final leg is what we're seeing, it's very challenging. So how does one navigate a bear market cycle? A cycle that is a common byproduct of a Fed that has pivoted from decades of ultra dovishness to one of an unsettled hawk. It has been my opinion for months, and it continues to remain my opinion, that 2023 will be the year that fixed income will likely outperform equities, just like I've personally witnessed in other bear market cycles in my career. I have seen numerous Fed tightening cycles over the decades, and all the ones I've personally experienced have ended up in a recession whereby fixed income outperforms. Now, I realize that given recent waves of overall market volatility, it is contrarian to keep buying bonds when yields tend to be gapping higher. However, waiting for the Fed to pause is a very difficult timing process, to say the least. It is my opinion that the Fed will end their tightening process much sooner than later, and that is why we have seen the current yields remain stubbornly low against the Fed's ongoing tightening process. The Fed has continued to tighten into an inverted yield curve, and we all know that an inverted yield curve is a clear recessionary signal to all investors, especially when the inversion lasts as long as it has. And to further my thought here, once the yield curve begins to normalize, rates will head lower as a result. So it seems to me that the current markets are predicting, given that yields have come back down, that this is going to be happening sooner than later. And obviously, when yields come down, your fixed income investments go up. If that wasn't the case, meaning that the Fed and the markets believe that rates are heading lower sooner than later, then we would be seeing a 10-year Treasury note trading closer to 5% than where it is today to 3.60. Let us look at some facts here. Inflation has come down in America from somewhere over 9% to now the 6% handle. And the Fed's prior and rapid historical hikes really haven't taken their full effect yet. So Fed hikes are really a lagging indicator, just like inflation. So as seasoned investors, we must therefore remove our obsession and full attention to inflation and turn it to the recession at hand. It's just how these predictable Fed tightening cycles go. I mean, it's that simple from my standpoint. One thing is the Fed will overshoot like they always do because they cannot afford to glide on in without inflation being completely extinguished. If they would gently have raised rates, the Fed would risk something that we call stagflation, which is something that they cannot control. When there's stagflation, the Fed can't hike, they can't cut rates. So it's been my experience, and this is the fifth tightening cycle that I've experienced in 40 years, that the Fed always overshoots on purpose because it gives them the ability to accommodate monetary policy in a recession accordingly. They almost always overshoot until something breaks. And we all just have been reading and listening about the news with the Silicon Valley Bank situation over the weekend. So from my perspective, there is no soft landing. There's no landing thesis to be had, as they are, to me, all a bit of a hoax as global decoupling that we heard back in 2008. Remember, we came off a horrible negative 0.4% decline in real GDP in America in December, and since August, that trend is ever so slightly negative at minus 0.1% annualized. So in other words, we've really already had our soft landing. I think that a lot of us heard about the job markets in America that have remained so strong. The U.S. economy has not created one full-time job since COVID. The 1.53 million jobs that have been created are part-time. We have seen 166 new jobs, but again, part-time jobs. And with all the stock market still trading at near 18 times forward multiple, in my opinion, that's just not sustainable in a recessionary bear market. This reminds me eerily of the dot-com bubble in 2000, whereby cash and other fixed income silos were seemingly far more attractive than the then frothy equity markets, at least until the Fed completed their hiking mission. I know that I kind of might seem like a guy looking at glass half empty, but I'm really not. I'm just a realist. Currently, there's a dysfunctional relationship with the truth here. So here's the truth. You need to know that the Treasury curve, the 2s and 10s, meaning the 2-year maturity and 10-year maturity, recently inverted over 80 basis points. The last time that happened was in 1981. And guess what? The double dip recession was 3 months away from those days of yesteryear. Is it different this time? I don't think so. According to Bloomberg recession model, there's a 100% chance of recession in 2023. The New York Fed model has it over 90% odds since January 9th of this year. And remember, we already had 2 quarters of negative GDP last year, so kind of my double dip thesis is really not so far-fetched. In the interim, the Fed is on a mission to virtually slam the brakes on the U.S. economy. The Fed cannot come and say it out openly, but it's clear to me that a recession is what the Fed feels is needed to crush this past inflation cycle caused by their own decisions, granted they had to, during the pandemic. A kind of short-term pain for long-term gain type of plan, in my opinion. In history, every time the Fed has raised rates, when the CPI was above 5%, we also had a recession. Additionally, when you look at, and I'm not an economist, but you look at the US LEI, or leading indicators, we're down 2% and have 9 months of negative reads. That's only happened during recessions as well. So I don't think this time is different. I think this time is actually something normal when you go back in history. So as seasoned investors, we must think defensive when it comes to our investment posture. With the current S&P 500 dividend around 2%, it's no match for treasuries, it's no match for fixed income of any type. So you got to go back to 2007 through 2009 to really see the last time that fixed income did so well. You have to stick with what you know. You have to stick with fixed income that provides you with defensive underlying credits or solid sovereign fiscal stewardship. It is my opinion that the days of double-digit returns must be viewed as past events. They need to be replaced with more normalized returns to the mid-upper single digits, knowing that that in itself is a difficult feat during volatile years. However, it remains my contention that the Fed is near the end of their mission, and positive returns via thoughtful and laddered fixed income portfolios will become feasible. Stocks usually bottom after the Fed has begun to accommodate, and I don't really believe that's a 2023 story unless this SVB or Silicon Valley Bank situation becomes more systemic. It's more like 2024, in my opinion, when the Fed starts to accommodate. In the meantime, there is nothing wrong with owning equities as long as you stick with defensive stocks in nature that have robust balance sheets and stock that pay very decent and very sustainable dividends. Again, these are all my opinions, and I'm really taking you at 30,000-foot view. So let me end by bringing it down a little bit. Many of my clients, I've been recommending that they buy duration, that you buy bonds that are further out, which is contrarian thinking. If you see what's been going in the markets right now, everybody's been rushing to safety, buying short-term, 1 year, 2 year. Heck, it's paying near 5% with the U.S. Treasury. Why not? What happens in a recession is those long-dated duration bonds that got hit so hard last year are the ones that recover the fastest, as long as you're sticking with credits that you've done your homework on. So if I were able to predict when the Fed would pause, I would then tell you to buy longer dated duration then. But I'm not that good. I don't think anybody's that good. Because when the Fed does end their tightening cycle, you will see a rally in long duration securities. Until then, I'm going to go back to my initial statement. There's pain and there's fear when you're dealing with a new cycle that many have not seen in over 15, almost 20 years. But again, when you look at a recession, the average duration of a recession lasts anywhere from 18 to 24 months, much, much, much shorter than an expansion. So hang in there. I think that I've done probably enough pontification for a morning before, I don't want to put everybody to sleep here, but I wanted to at least thank Sagicor for asking me to at least share some thoughts about the markets. I don't know if we were taking questions or do I step off? You have to guide me from here, but I want to thank you all for listening to me.
So we're actually going to take some questions for Gregory. So if we have any questions, there are mics situated throughout the room that you could just approach the mic. I see a question coming. Thanks, Gregory.
Thank you.
How do you see the Jamaican economy performing? I notice you have talked about the U.S. and I know you are very familiar with Jamaica. Where do you see us going?
I actually probably know more about Jamaica than I know about the U.S. economy. From Jamaica's standpoint, you heard me mention that stick with what you know and look at sovereign credits that have fiscal stewardship. The Jamaica economy, when I came down here, my first year down in Jamaica was 1993. Not a great year. And then we went into the financial crisis down here locally. Since that time, through fiscal austerity, NDX1, NDX2, your government has done, various governments has done an excellent job of changing the optics of the Jamaica economy. I'm not an economist, but I look at your BOJ, and they were cutting rates sooner than the Fed. They were on the game sooner than the Fed. I look at the growth. I look at at the IMF standby liquidity agreement that was just signed for $1.9 billion, that basically Jamaica does not have to go to the public markets and raise debt at high rates. They're set for the next 2 to 3 years, if not longer. So when you look at the Jamaica situation, we've looked at a credit, meaning I'm talking about the bonds, that have gone from something that you would view as risk to one of the gems in the Caribbean. We're seeing, many international holders of Jamaica debt that we never have seen before. 10 years ago, 15 years ago, probably 60, 70% of Jamaica's bonds were held here on the island. We're not even at 40% now here on the island. And that's a good thing. That means that you do not have to service your own debt. You actually put it off in the international community. And that's what you want to do. So I hope that answered the question, but I could literally go about the Jamaica economy for about 3 hours, and we don't have that time. Any other questions at all? Oh, no, I'm in trouble now.
No.
Yes,
no,
Mr. Chairman.
No, thanks, Greg. Given, in your view, the imminence of a U.S. recession, what do you see as some of the impacts on, for example, Jamaica as one of, obviously our main trading partner? How do you think that will manifest in the coming 18 to 24 months?
Sure. I'll answer this one broadly. I cannot tell you how many events I've been over the years where the question says, we understand that when America gets sick, then Jamaica catches the cold. I look at, obviously, Jamaica is a tourist-based economy. Now, having said that, compared to any other country in the Caribbean, the diversification is incredible. But if you look at your tourism, obviously, that's the heart of the economy here. And if you look at the tourist numbers and how well they actually held in during COVID and how well they've done since then, in a recessionary environment, you look at all the stimulus checks and money that have been spent in America. And I don't know if you guys have looked at the cost of airline tickets, but it is simply oppressive as far as the cost of airline tickets. So when we see, I think, Americans, which are a big part of the tourism sector here in Jamaica, coming down to the island, instead of going and doing those fancy trips in Europe or Asia that cost hundreds of thousands of dollars if you have a family of 20 or 30, going to Jamaica, which is less than a couple-hour flight from most places, is going to be probably the trip of choice. So I think from a recessionary standpoint, I think globally, we are going to have to tighten our belt. All central banks, Jamaica included, had to dish out doses of stimulus because they did not know what they were dealing with the pandemic. We have never seen this in our lifetime. It could have been much worse. We lost many great people, but think about it. It's 2 years after the fact. We don't have masks on, right? So I think that was overkill from the stimulus part of the equation with all the banks globally. Now it's time to kind of pay the piper for those, stimulus and the free money that we had to do during those economy. And so I think you're going to see a slowdown globally, but I think Jamaica is going to fare quite well. Any other questions before I step off the stage and take a glass of water? Listen, thank you very much for listening to me, and Sagicor, thanks for asking me.
Well, actually,
one more?
We have 2 more questions.
Two
so
more.
We'll take 2 more questions.
I came in that way? Okay.
Good morning, sir.
Good morning.
Your presentation was very, very instructive, especially looking at it from the American perspective. I wonder, given the fact that you drill down so much in the figures and the statistics, and when you match it with what the government is actually projecting and saying, don't you recognize that it is operating at variance with what you are saying? Because the administration is basically saying that there's no recession, and they're performing as if there's no recession that has hit America up to this particular point in time. But with your figures, it is basically saying something different. How do you reconcile that with them?
Oh boy, I'm not going to cross the lines in the political arena. That's always gotten me in trouble. In my lifetime, as I said, I've seen 4 real organic Fed tightening cycles. I'm just going by history that I've seen with an inverted yield curve lasting over a year, with the Fed at a historical rate of tightening. We've gone from 0 to over 4.5% in like that. That process usually takes 5 years. I think the Fed also, as I said earlier in my remarks, they want a recession so they can then tweak and accommodate and begin a recovery. Any politics from the standpoint of political leaders in America or any country, obviously you're not going to come out and say, well, I've got some bad news, we're in a recession. Please vote for me next year. I think that there's many that are going to say that they're not a recession, but the numbers that we've seen, the GDP, the LEI, all the statistics point pretty loudly at that. When you see the 16th largest bank in America have a run on it overnight that most of us never have heard of, right? To me, that doesn't happen in a roaring, robust period of time. So I would view that from politics and in the investment world, everybody was calling for the roaring 20s, which was a term used back in 1920. It was going to happen after COVID, right? And I'm going to say that it's my opinion that it's really going to be more of the normalized 20s. This is actually a more normalized environment than what we've been living through. But I can't answer to the politicians that get on the television and spout things just completely off the top of their head. Last question, there's one more, and then, or is that it?
One more question.
Good morning.
Good morning.
You mentioned that in the United States, all the employment over the past 3 years were part-time jobs. It sort of sounds a little bit surprised. What are the situations have you picked up in the Jamaican context?
What's the last part you asked me about the Jamaica context? I'm sorry.
We spoke about job opportunities, and you had indicated that in the United States, all the jobs that have been picked up are only part-time jobs, and they have not got any job, full employment, permanent employment. What are the implications for the Jamaican market in terms of what have you picked up?
Yeah, good question. I think when I say that no full-time jobs are picked up, but yet you're seeing these job numbers so aggressive, and that's why the Fed has been hiking. Well, if you really look at it, it's the COVID jobs that were lost where they're coming back to work. They're counting as that's a full-time job, a new job. I think that COVID has done one thing that hopefully will change, but it certainly has not thus far, and those wanting to work either part-time or remotely that have certainly enjoyed their home life and experience and took advantage of COVID of really bonding with their families again. So I look at the employment situation in America. We're already seeing massive layoffs occur in the tech sector. I don't think there's going to be a lot of implication for that down here in Jamaica, because remember I said that the average recession lasts between 18 months and 26 months, and recoveries, expansions are a lot longer. So this is a kind of, I'm going to use the words I used earlier, short-term pain for long-term gain. I'm not painting a picture that this is the way it's going to be for the next 5-10 years. I'm painting the picture as this is what it is, and if you look from the standpoint of investments, fixed income does better than most other investments during these periods. Again, thank you very much for listening to me. I'll be here afterwards, and thanks to Sagicor.
Gregory, before you come down and have that glass of water, we'd love you to accept this lovely gift from Sagicor. Another round of applause for Gregory Fisher, our keynote speaker. A very sobering presentation, a time of short-term pain for long-term gain. We got a bit of reschooling on bear market cycles, fixed income versus equity. And I know we're paying that much more attention to our next presentation, which is our economic review and investment presentation. And I saw the presenters gearing up for that presentation and some of the questions. Yeah, we are in a recessionary cycle, drop off in stocks. Then there's the reflective bounce back and earnings erosion. And as Gregory started, he started with reminding us of the fear and the pain, and closing off with the fear and the pain. And I know many of us were wondering how long this fear and pain would last, 18 to 24 months. So we just, because after COVID, we're like, more? No more, sir, no more. So at this time, I'd like to welcome for the economic review and investment presentation, the presenters from Sagicor, Mr. Neil Kellyman, Assistant Vice President, Pension Investments, Sagicor Life Jamaica Limited, Mr. Robert McKenzie, Assistant Vice President, Group Treasury and Asset Management, Sagicor Group Jamaica Limited, and Mrs. Donette Scarlett, Senior Vice President, Group Treasury and Asset Management, Sagicor Group Jamaica Limited. I know Gregory gave us a sobering presentation, but he also gave us some hope. So please, a round of applause for our presenters.
Morning, 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 trustees. Truth is, everybody who came before me kind of said what was in my presentation. So, not too sure why I bothered to come up here. But I'm going to try and put a different spin on it if I can. But actually, trustees, it's indeed a pleasure to be addressing you in this format. A lot of you, I'm seeing you for the first time in terms of in person. Everything has been on Zoom, you know, so I'm hoping that after this experience today, we can have a lot more face-to-face meetings, right? Because those of you who know me know that I like to meet and interact with my trustees. So I really prefer face-to-face. Hope we can have some of that this year, right? Kind of tired of the Zoom and the Teams now, okay? All right, so I'm really happy to see all of you, and you know, just want to interact with you for the rest of the day, all right? But it's my job today to basically just give an overview, and we'll be sharing this presentation, three of us, myself, Robert, Donette. I'll give the overview. Robert will look on the actual fund performance for each of the funds, and then Donette will give an outlook and strategy, all right? Okay, so Sagicor, through our experience, innovation, and performance, you know, credible performance over the years, and you know, we have been talking about it, we have been able to maintain the #1 position in the industry, with a 30% market share. That represents 209 active pension plans, which is about 57% of the private pension plans in Jamaica. You know, I mean, that's a lot. Over 45 years, we have earned about 19% per annum on average. That's a big deal over 45 years because inflation was single digit for that period. And the funds under management has grown to 212 billion as at December 31st, 2022. Our president mentioned it, but I'll also say it here. Sagicor has the awesome responsibility of assisting almost 48,000 people in preparing for their retirement. That's a lot of people, right? 11,000 of them are already in retirement and receiving pensions of about $7 billion per year. And I think all the speakers before me said it. That's a really awesome responsibility, and that's something that we take very seriously. We have a lot of lives in our hands, and we treat it with the utmost respect. So I just want the trustees to know that. So we mentioned the fund size as at 2022, the 212 billion. The growth per annum from 2018 has been about 4%. You see, we have had two dips, one in 2020 when it went down to 205 billion, and it was as high as 220 billion, came down to 212 billion. So a dip in COVID and a dip last year because of the geopolitical issues. One thing I want to point out though, not all the funds are in the pool. We also manage segregated funds, which is an option that trustees also have. About 61 billion in segregated funds, and these funds, the trustees are allowed to actually choose their own assets that they want to invest in with our guidance, of course, right? So the size of that is 61 billion. Sagicor Pool Investment Fund Limited. So the pension funds are segregated, separated from Sagicor Life, Jamaica Limited. So we have a special vehicle, Sagicor Pool Investment Funds Limited, separate board of directors that oversee these funds. They ensure that we keep up with we uphold all the regulatory requirements and ensure that everything runs in a smooth manner. So the chairman mentioned him earlier, Dr. Honorable R. Danny Williams, who is not here today. The other members are our President and CEO, Mr. Zaka, Elaine Robinson, Andrew Williams, Errol McKenzie, and I would want to mention it again. Two of these members are actually trustees from among you. And there was another, and we're looking to put another one, right? So we always have at least two trustees on this board, and that usually help with the transparency, right? And in a time like this, when we had some negative news in terms of the entire investment industry, things going on, it's good to know that your funds are segregated. It's managed separately from the company Sagicor Life Jamaica Limited, right? A lot of governance that takes place there. So I just want our trustees to be assured of that. So Sagicor still has the largest array of pension funds under management, about 9 pool funds, 4 of them dedicated to fixed income, 2 to equities, 1 international, 1 local, 2 balance fund, 1 international, 1 local, and also a mortgage and real estate fund. One of the widest array in terms of options given to trustees. All right, so this is our investment team, led by Donna Scarlett. The only person missing from this team, this lineup, would be Candice Villiers-Bowes. A lot of you would have known her, would have met her. She actually transitioned from the pension investment teams, and she's now working with Shane Walters. We wish her all the best in her new role at Sagicor. And before I move on from here, I just want to highlight 2 persons in my team, Fedora Bernard, Adrian Clark. Are you guys here? Raise your hand. Oh, way at the back. So some of you might know the names, right? Because they harass you every day. So those are the 2 guys who are set on you to call you and email you every day to have meetings, right? We have been doing that. It was important during COVID. It was important last year. Still important this year. So you'll be hearing from them a lot in terms of trying to set up meetings. So don't put their email in spam or anything like that, right? So just try and accommodate them and see if we can set up these meetings, because we want to meet with all the trustees at least once this year, and that's something that we try to do every year. This year is no different. Actually, this year is even more important. So you'll be hearing a lot from them, right? So what happened last year? A lot has been said already, about GDP and all of that. But we have been seeing growth in Jamaica, coming off a negative growth of a negative 10% in 2020. We had a growth of 5% in 2021 and a projected growth of 3% in 2022. Most of the growth would have been as a result of the removal of the COVID-19 restrictions, people moving around again. So a lot of activity actually taking place in the economy. And in particular, the hotel and service industries would have contributed a lot to this GDP growth. We watch to see what the growth might be for 2023. There might be some headwinds with still relatively high inflation and geopolitical issues, but we'll wait to see how it plays out in terms of growth. Unemployment, for the same reason, has been coming down. Reopening the economy, a lot more job opportunities in those same sectors I mentioned, service, hotels, restaurants, those kind of things. So we see where we have one of the lowest unemployment rates since 2017, and that's a good thing for the Jamaican economy. I'm not sure if all of them are temporary jobs or contract jobs. I know that's what the trustee was trying to find out. I don't know, but we know we see a lot of contract jobs these days, so possibly a lot of them are contract, not necessarily permanent. I'm not sure, I don't have the data. But tourism is back, right? And it's back with a bang. We see where Jamaica is actually outperforming the rest of the world in terms of the growth in tourism, in terms of how it is rebounding. And between January and November last year, there was about 127% growth in tourist arrivals when compared to 2021. I mean, that's a massive growth, a massive recovery. We're still not quite back to the pre-pandemic levels of 2019. We are behind by about 22%. But this growth in tourism will definitely augur well for our mortgage and real estate fund, which also invests in that sector. So things kind of looking up. The Jamaican dollar would have appreciated last year against the US. Normally when you say that, it's a good thing. So it's a good thing for the economy, but it's a bad thing for the pension funds, especially from the point of view of the US assets in the pension fund. Because what happens is that when the Jamaican dollar appreciates, and then you convert US assets back to J, you get smaller Jamaican assets, right? Because the Jamaican dollar is stronger. Not to fear though, because we don't expect this to continue for very long. The main reason for the appreciation was because the BOJ has been aggressive in terms of intervening in the market to try and make sure they don't have a big devaluation in the dollar in addition to big inflation, right? So they've been very targeted in trying to keep the dollar, level, not let it slide too much. And as I said, I don't think that's going to continue forever. But that would have negatively impacted portions of our US portfolio last year. Remittance inflows, pretty decent. Last year was not as high as 2021, but that's not surprising because with the reopening of the economy and the reopening of the borders, you would have other inflows coming in, not necessarily through the remittance agencies, right? So really and truly, it's still a good performance in terms of remittances. In terms of the NIR is very, very healthy. Actually, it represents about 25 weeks of imports of goods and services, whereas the benchmark is 12 weeks. So it's more than twice what the benchmark is. So we're in a good position, and it's poised to grow further because I think the IMF would have earmarked about 1.7 billion for the Jamaican government to assist with its recovery. So it could get even bigger and stronger, and that's good news for the economy. Stock market, at the top, you see the junior market, the junior stock exchange, the best performer, probably the best performer in the world, right? 16%. So that market would have had a lot of activity last year with IPOs, but guess what? It's in practical terms, it's not really investable for big funds like ours, right? Because the float that's in the public is pretty small, right? So with our funds of over 200 billion and equities over 50 billion, it's hard to actually get stocks in the junior stock exchange. So where we might have a few, Sagicor funds would not have a lot of stocks on the junior stock exchange. So we would not have seen a 16% performance, right? That would not be practical. So we are mostly in the main index, and the main reason for that, main index has been around for a long time, over 1 trillion in terms of market capitalization. Sagicor has also been investing for a long time. So over the years, we would have acquired mostly main index stocks. And of course, at -10, that would have negatively impacted our equity portfolio also. S&P was the worst performing at -19. We also invest in that area and would have impacted our portfolio, right? So with rising rates and people running to invest in short-term paper, stock market will not do well, right? So that was the main reason for the negative returns on the stock market last year. High inflation, high interest rates, people running to safety, trying to get high rates on the short-term market. So we'll watch and see what happens this year. I think Donette might talk about that some more. So Greg talked about the 10-year Treasury, the Fed increasing rates from almost 0 to 4.5 to 4.75. That would have caused the 10-year Treasury yield to go up. Short-term rates went up higher than the 10-year Treasury, so that's why the yield curve is inverted, right? But, we watch to see what the policy actions will be. They said that they would have probably have a terminal rate of about 5.1%. Not sure yet, because inflation was still strong. At one point, they said terminal rate might go as high as 6%. But this morning, the inflation numbers came out for the US at 6, dropping from 6.4. That might paint a different picture. I'm not sure. We'll watch to see how that plays out, right? But we're waiting for the day when rates start to come back down so that, as Greg said, fixed income will become king again, right? Great. So oil prices would have shoot up right after the war started. Main reason for that, the countries involved in the war are actually main producers of this commodity, among others. So oils, fuels, wheat, grains. So the prices would have run up, but the good news is it came down and has been steady for a while. Projection is that it should be steady and relatively low for a while, and that is good. That augurs well for inflation, not just for the US and Jamaica, but the rest of the world, right? So in terms of inflation, so same things that affected inflation in the US would have affected Jamaica. Our inflation would have peaked at about 12%, 11.8 to be exact, in April. Once that war started, it kind of started to come down afterwards to as low as 8.3% in January. So that's a very good trend, right? But what happened is that in order to try and curtail inflation, the Bank of Jamaica raised their policy rates from 0.5% to 7% in a short space of time, pushing up interest rates. So Treasury bill rates jumped from 4% to 8% in a very short space of time. That was a big shock to our bonds, right? So those bonds would have suffered because we have mostly long-term bonds in our portfolio, right? But guess what? If those rates come back down, I'll go with what Greg said. Those bonds will be king again, right? So we wait for that day when those start to rebound. But actually, they started to rebound from October last year. You see where the Treasury bill rates have actually leveled off at about 8% for about 6 months now, not moving much. That probably is an indication, that rates are leveling off. But we're waiting to see it come back down. That would be great, right? But as we have to do, kind of watch and see, because we still have some headwinds. A war is still going on. Inflation is still an issue. So, we have to be cautiously optimistic at this point, right? So I think that was my last slide. I'm going to ask Robert to come and just give you an idea of how each of the funds perform, right? And he'll take you through that. Thank you.
Thank you, Neil, for that update on the whole overview. I think it sets the tone as relates to my part of the presentation, which really covers the performance of the portfolio. But before I get into the performance of the portfolio, I want to just say, it's wonderful to see my trustees. It has been for me, even prior to COVID, not being a part of that meeting every day with your clients. But honestly, I'm really thrilled to be here as a part of the presentation, because the transition that we did was really geared on to really enhancing and trying to mitigate against any potential risks that this actually, could pose a potential risk to our investments. And we made that focus to have some focus on managing the portfolios versus having the day-to-day meetings. So definitely, I believe that that was a certain good move, because it was a good time as relates to seeing COVID and having that focus on the management of the assets on a day-to-day basis that really drives on the mitigation of the potential risks that we're actually facing now. So for my presentation, we'll be starting off with the fixed income portfolio. Now, this portfolio is really our long-term Jamaican dollar portfolio, and one of the things that we'd have seen happening in this climate is that higher interest rates in the market, and Greg had mentioned it, it is no different than what we're seeing happening internationally. Locally, we're seeing our rates increasing as far as moving from the policy rate of 2.5% since the start of the year, going up to 7%, and it has been kind of maintaining at that level now. But what that really means for bonds market within the investment space is that because it has this inverse relationship between how interest rates move and the value of market value as bonds, what you found out that as rates were going up, because this portfolio is more on the longer end of the investments, what we'd have seen is that the impact or sensitivity to change would have been significant, whereas interest rates were going up, the market value of those bonds are going down. But the reality is the same if you were to do the reverse. If we were to see interest rates stabilizing, maybe slightly reducing, then the reality is that we will actually see improvement in some of these values, right? So for 2002, we actually saw this portfolio actually underperforming by 2%, and even compared to its benchmark was actually 1%. And not to mention, looking at inflation over last year, which actually capped out at the end of the year by 9%. Now, one of the things I would say as relates to these type of portfolios is that because we have done our due diligence and in terms of the assets that we would have purchased into the portfolio, we know that these investments are solid investments and there will be a round to the maturity of those investments. And one of the things that you would notice is that as these securities come to maturity, the risk that we're looking at now in terms of short-term volatility is actually disappeared at maturity, because that is how bonds are actually working. But at the same time, based on regulations, we have to report on the performance of these portfolios each year or each month to our trustees. But just to say though, as the markets shift, we definitely will see performance movements happening, and definitely going forward, and what we're anticipating we could see some improvement. But just to even look on our long-term performance of this particular portfolio, that over the last 10 years, average per annual rate of return, this fund actually did a rate of return of 9%. And this is what I've been talking about. As you look a little longer, and not necessarily on the short term, you would have seen some sort of improvement, sort of reducing those or mitigating against those potential short-term risks. And when you compare to that same benchmark over the last 10 years per annum, it's actually way better in performance compared to a 6% benchmark and an inflation rate of roughly 6% over the last 10 years. Now, we're going to move on to the Pool Foreign Currency Index Fund. Again, the conversation is the same. On the global space, we would have been faced with higher interest rate in the market. We spoke about that inverted yield curve. And what that really means in the market is that we actually saw a short-term investment actually providing the same rate of return as a long-term investment. And typically in that market, you generally find out that the longer-term investment should have provided a better return on your investment. But what is happening in the market now, the short-term is actually meeting up with the long-term investment. So for that particular year where we actually saw where the portfolio also underperformed by 7%, however, when you compare to the benchmark, you'd have seen a noticeable difference between how much is the difference between the benchmark of the portfolio to the actual rate of return of the portfolio during that time. Now, the reason for that is that on the international space, we have more flexibility in terms of rebalancing the portfolio at a faster rate. And one of our, I would say, directive in terms of seeing higher interest rates was really to reduce the time to maturity for our portfolios. And just to give you an example, that at the start of 2022, the average time to maturity for this particular portfolio was 11.5 years to maturity. And as at December of 2022, we were able to reduce that average time to maturity down to 9.7%. And that would have been one of the significant reasons why we were able to, while we were underperforming, but we actually did better than the actual index that we're actually tracking. So it just shows you, and if you were to compare on the Jamaican dollar side, you would have realized that it held firm, which means that we weren't able to reduce long-term for short-term based on the flexibility of the local market. Now, on the money market fund side, now this is really more of our shorter-term portfolio. Still have some impact to interest rate risk. However, because the time to maturity is shorter, the average time to maturity for this portfolio is actually under 2 years. Now, what does this mean is that, yes, rates are going up. Yes, they may have an impact, but what happens for this particular portfolio is that it's able to reinvest faster than the other portfolios that is actually waiting 9, 10 years for a security to mature, for them to get a large cash flow to actually reinvest in the current situation. So what you find out now for this money market portfolio was actually able to buy some of those treasury bills that was actually providing strong rates of return within the market. And for 2022, we actually saw that portfolio generating a positive return during that time. And again, the situation still remains the same. The longer that you go out in terms of the performance of the portfolio, you'd have noticed that the average 10-year performance for the money market fund actually generated an annual return of 7% per annum over the last 10 years. And when you compare to this benchmark, which is the 180-day treasury bill, that rate was actually 5% during the same time. And again, even still a stronger return than the inflation. And again, I just remind the trustees that really pension funds is really for the long-term investment. While there are opportunities now, we're gravitating on those opportunities, but we still have to think that, what will happen 5, 10 years from now when interest rates are now back down to 2%, 1%, then definitely that ability to switch into longer-term investments will be the key at that point in time. Now we're going to go to the last fixed income portfolio, which is our pool CPI fund. it was actually our star performer for 2022, and it was really based on the nature of the portfolio. It's actually based on many allocation towards CPI bond investment. And for anyone who doesn't know in terms of how this bond actually operates, I will let you know that it really hedges against where the direction of the inflation rate in Jamaica is moving. So if you're seeing inflation increasing, then it's likely that you anticipate that the CPI portfolio will also increase as well. And that is how the nature of the portfolio would have been driven. Now, based on the volatility in the market, I want to spend a little bit to kind of talk to our trustees as relates to what is currently happening now for the portfolio, what we would have seen in 22, is that because of all the volatilities that we would have seen, you're seeing the equities market, both locally and internationally, actually having some volatility. We saw where on the fixed income side, we're still seeing that volatility. But when you look at the CPI fund side, based on the structure of the portfolio, the CPI bonds is only focusing on where the inflation rate is moving. So we saw consistent positive returns for the CPI fund. And what we'd have seen over 2022, that many of our trustees would have shift focus to get some cushion as related to what they were anticipating happening within the global space. Now, just to give you some context in terms of numbers, this portfolio actually, as at the beginning of 2022, was actually valued in terms of size of fund at $13 billion. By the end of 2022, the size of that portfolio is now $25 billion. Just to give you an idea of the nature of how the portfolio would have increased over the year. So yes, performance was positive, but the real main driver of that movement in the NAV was more persons coming into the portfolio. Now, I will say to you that the CPI bonds are really limited into the market, that since the debt exchange program, which is over a decade ago, there hasn't really been no new issue of inflation-linked bonds. So what has been happening over the years is that where opportunities present themselves, the CPI fund will continue to acquire CPI bonds in the portfolio. However, based on that significant push into the portfolio, we actually saw a high cash balance within the portfolio that was more than the available CPI bonds during 2022. So what did we do during that time? So pretty much there were opportunities within the local space. There were high interest rates on this treasury bill side. There was opportunities in the lease market. And we took some opportunities to move out of non-inflation linked bonds into actual treasury bills, leases that was actually generating returns that we believe could match up with the performance of a CPI fund, right? Now, this is not the true nature of the portfolio, but that was the best opportunity that presented itself for the fund, right? Happy to say, though, that at the end of 2022, we're able to still maintain a return better than inflation, which is really the mandate of the portfolio. And you can see that in the 12-month return, the 12-month return ended at 10% versus an inflation rate of 9%. And again, when you look over the last 9 years, wherein the portfolio had majority CPI funds, I would say that the portfolio had at least 90% of CPI bonds over that 10-year period, with the exception of 2022 when there were other securities that were added to the portfolio. Nonetheless, it did perform well with a 9% return, better than inflation and improving the real returns for our clients. Now, Neil had touched on some of the indicators that was happening for the equity portfolio. Just to say that on a macro level, what we see happening internationally does have some implications of what is happening locally as well. And I would say that one of the main drivers of underperforming was the fact that fixed income on the short-term side was doing extremely well. Investors got crushed, over COVID in terms of the performance of the equities market. So the focus was slightly different. Where we saw interest happening on the equities side was really through junior market companies. That is where we saw more IPOs hitting the market, and then potential investors actually took opportunity during that time. Now, our pooled equity fund, which is actually just below 50 billion Jamaican dollars. If we were to invest within that space in a significant way, it may not necessarily drive the allocation metric of the portfolio, meaning that we may be able to get a 1 or 2% based on the size of the portfolio. So we had done some of those strategies, but nonetheless, our portfolio is mainly invested into the main market, which Neil would have mentioned it in his economic review that the Jamaican main index for the Jamaican Stock Exchange actually did underperformance by 10% during 2022. So no difference in terms of our portfolio performance. It actually underperformed by 11%. However, again, when you look on the long-term performance of the portfolio, and actually over the last 10 years, the pool equity fund was actually the #1 performing portfolio when you look on the statistics for the 10-year return on all of our portfolios. And it's actually in line with the Jamaican main index. Again, still stronger than inflation, which is really providing stronger returns for our clients. So we touch across in terms of the international space. Definitely, we did see some significant opportunities within that space. Again, when you look on all the sectors in terms of opportunities within that space, there is 9 sectors that we really track on a day-to-day basis that is really covering the S&P 500. And what we saw happening during that space with higher inflation, disruption in supply chain, higher interest rate market, what we saw significant volatility within that space. Now, even with this portfolio, because you're invested in Jamaican dollars, and this portfolio now invests into the US market, for 2020 and 2022, we actually saw appreciation on the Jamaican dollar. So that is now an additional impact on the portfolio where your US currency on investments is now valued less in terms of Jamaican dollars based on the stronger movement in the currency. So for 2022, for the performance for the international equity portfolio, it actually did underperform as well at 18%. And when you look on all of those sectors that I've listed there, with the exception of energy and utilities, we saw all other sectors actually declining over 2022. And we are talking even as high as 40% down in a particular sector. So just again, we did continued effective management of the portfolio. We would have taken opportunities when the markets are high, and then we reinvest back into the market when the markets are low. But Donnet will come up later to just give you a full perspective as it relates to what is our focus going forward into the year in terms of additional strategies that we'll implement for this particular portfolio, because it's quite more liquid in terms of how easy we're able to get in and get out, and she will provide you with additional strategies for the future. Now, our mortgage and real estate fund stands as a great opportunity for clients, especially in the pool investment fund space, that really takes away from someone who has a direct management on a property to do their own management of those assets. Now, our pool mortgage and real estate fund, which is approximately just under 32 billion Jamaican dollars, really comprise of exposure to 15 different properties that covers the sectors in tourism at 59%, also commercial spaces at 26%, and there is allocation to warehouses, and there is 7% for land. And that land is really going to be used for future developments in the future. Now, the fund did a positive return for 2022. We had anticipated more recoveries coming out of COVID. However, what I would say is that when we look on each of the portfolio under management, we did see some positive metrics. So we saw a stronger valuation over the prior year for several of the properties that we manage. And one of the most important things is that we're still maintaining a positive cash yield on these investments. And that is really one of the main things to ensure that we're still bringing in inflows into the pension funds as relates to these properties that we're managing. And again, looking at the 10-year statistics, the 10-year return on the mortgage and real estate fund was actually 10%, which is again stronger than inflation, which is really protecting the real value of your investments. Now, we'll touch on two balanced portfolios. So the first is the pool diversified fund. So many of the metrics that I would have discussed for any of the portfolios will come back down to these balanced funds because it really provides a diversification across the market. So when you look on a diversified fund that has exposure to Jamaican equities, global bonds, Jamaican fixed income, global equities, those were the areas that we saw underperformance within the market. And because of those underperformance, also we'd have seen the diversified fund also seeing that into 2022. But again, we look on long-term performance because again, one of the things I was saying that as the markets change, because we'd have seen it in the past, we'd have gone through the financial crisis in the 90s, we'd have gone through the 2008 recession, we have gone through the debt exchange program, not just once, but twice, and now we're actually going through COVID. Now, within those disruptions in the market, what we actually saw happening post those disruptions was that the investments regained stronger values post that. So COVID was just slightly different where the pain is just a little bit longer than all of those disruptions that we saw in the past, right? And that is understandable. But again, when you look over the last 10 years, the portfolio is still positive, giving an annual return of 9% compared to its benchmark still at 9%. And again, stronger than inflation over the last 10 years. So the Global Markets Fund is another balanced portfolio, but it focuses on the international market side. Now, Greg would have mentioned the pain on the fixed income side, but we're saying fixed income is likely to be king for this year. Now, based on what happened for 2022 and what happened on the fixed income side, and in addition what also happened on the equities side, this portfolio would have seen some impacts based on the global space, and this portfolio for the 12-month period, did paint that similar picture. But again, over the last 10 years, when you look on the performance of the funds, again, still strong, still held in positive. Reason being is that we're invested in quality assets that as the volatilities happen within the market space, you tend to find out that if you stick within the funds, it still maintains stronger balances as the investment manager is doing their due diligence, doing their rebalancing on the portfolio. So just to look at a recap of all the returns, as I mentioned, for 2022, the CPI fund was the star performing fund. Other positive portfolios for the year was mortgage and real estate fund at 6% and the money market fund at 2%. Now, just to close off, looking at some average annual returns. So this was a recap of some of the slides that I would have mentioned. And just to really drive home the point, when you look across all the pool investment funds that we manage over the last 10 years, the average 10-year annual return on these portfolios would have driven positive real return for our clients. And we can't stress that even more because as we see that high inflation, it's sort of eating away on pension. But as you invest within these pool funds, not just 1 year, but over the life of the pension investments, what you find out that for every dollar of investment that you put in the pension fund, you will see that positive real return on your investment. And I will show you that in a slide to close. Now, looking at the 30-year picture where we had 30 years of performance for 3 of our portfolios, we saw the fixed income fund actually being a star performing fund. So you realize that things is changing now. Fixed income is under pressure because of high interest rates. 30 years ago, compared to now, the fund have been gravitating with high interest rates on the fixed income fund side, actually generating a return of 18% per annum. Just to say that long-term funds actually work over time. So definitely fixed income would have been strong. Equities still ahead of inflation. The mortgage and real estate fund ahead of inflation. The reason why you're not seeing other portfolios that Sagicor has been innovators within the market space. So we create new portfolios to attack any new opportunities that we see within the market space. So these are just 3 portfolios that we had over 30 years. The others were less in terms of the years that we had on a management. And just on my final slide before I hand over to Donit is This shows a historical growth just to prove in terms of why our track record really means a lot in terms of performance. Now, this graph really depicts a $1 million single investment in the Sagicor Pool Investment Fund going back 25 years. Now, the bottom line is actually depicting the movement of inflation on that single $1 of investment. Now, we would have seen that over that 25-year period, based on the movement of inflation, that the value of $1 million is actually now just under $7 million. Now, when you look on the green line, which is the line above, it really tracks the performance of the average return on our portfolio. And that one single $1 million investment, it had gone through the financial crisis in the 90s. We spoke about the Great Recession. We spoke about the debt exchange program. There was 2. And then we also are going now through the COVID-19 and the war and Ukraine crisis that we're seeing in the market space. Now, even through all of those volatility, which are really major events in the investment market, that single $1 million would have sustained its value, growing up to $26.9 million just based on a single investment of $1 million. So it just shows that when you stick with your investment over time, the investments will work for you. And this is actually showing a way stronger return against inflation. And you realize that what is true for this slide is that as you go longer, the gap gets wider, right? So for someone who invests in a pension plan for 40 years, they're actually seeing stronger value on their deposits that they have made into the pension fund. So now that closes the end of my presentation. Now I will hand over to Donnet Scarlett, who will give you an idea of in terms of the outlook and definitely how is it that we're able to see some opportunities based on our strategic initiatives. Thank you.
Thank you, Robert, and everyone. Faces here today. The previous speakers have mentioned a lot of stuff that will impact the outlook and strategy that I will discuss with you. Robert ended on the note of how $1 million would have grown for 25 years. And I think it's important, even though we're looking forward, to mention that historically, Sagicor has navigated our pension fund management from a myriad of turbulent times, as would have been highlighted by the, so we won't repeat them here. And cliché as it is, thanks, tough times don't last, tough people do. Our forecast for 2023 is largely informed by entities such as the IMF, the World Bank, and our own Bank of Jamaica. And some of these risks that we'd have seen in these turbulent times will remain. When we look at our main themes, which focus on inflation, interest rates, and GDP growth, we will see that inflation trend, though downward, the risk still remains as a result of the geopolitical events and the pressures caused by wage increases. It is therefore important that we not change our proven course, the course which would have led from $1 million becoming $26 million today. We have to stick to our core investment strategy, which will continue to serve us well in the long term. I won't rehash the numbers, but just to point out that what we're looking at here is for Jamaica, it's expected that GDP growth will be positive, whereas, as Gregory would have mentioned, some fall off is seen. Sorry. Lost my speech. Some fall off is seen for the US. And on the CPI side, we've just spoken to inflation being tempered. So locally, our policy interest rates are expected to level in terms of where the trajectory has been. We are expecting to see some fall off in those rates. With regards to inflation, GDP growth, and foreign exchange, and the equities market, we are expecting that we will see inflation temper. We will see a decrease in the equity market, and we are expecting to see a decrease in foreign exchange over the long term. And as we'd have said, in the bond markets, we're expecting some recovery. Of note, however, is that with regards to the foreign exchange markets and how we will manage our portfolios, we would be looking at how this is impacted by regulatory changes. We are mindful that we would have seen the markets over the last couple of years would have moved in, I think it was Neil's graph that showed it, up and down, although the trajectory expected is a continued depreciation. So what we would do in our portfolios for the foreign exchange markets is to continue to monitor our positioning, continue to be mindful of regulatory changes, because there are restrictions that are there now and will continue to be placed on our ability to invest in the foreign exchange space. So we will continue to target assets that benefit from the current elevated interest rate. Our focus is to mitigate risk while we continue to have prudent investment management around the outcome for your funds. And in a sphere that we intend to continue to participate is the real estate space. What are we expecting on the fixed income side? It has been said. It is expected that interest rates, though now elevated, will moderate. They will moderate, and there is an expectation that they will decline. What this decline will mean, and it has been said, but it bears repeating, is that our fixed income portfolios will then benefit from improved prices, which would have been the result of the negative return. The depressed prices would have been what would have resulted in the negative returns that they would have seen over the past years. But we're expecting the biggest recovery within the fixed income space. However, we will continue to monitor and implement short-term strategies because the fact still remains that the turbulent times are still here. There are still opportunities in the short and medium term in the fixed income space. And so we are currently, Robert mentioned, reducing the average time to maturity in the fixed income portfolio by investing in those short-term leases, treasury bills, Bank of Jamaica deposits that give us those short-term returns. And we will target low-risk fixed income instruments at attractive yields. When I speak about the equities portfolio in a second, that also is a strategy that will carry to the equities portfolio, although we will maintain our core strategy in equities. Reason being that short-term, higher-yielding investments will help to improve the returns within the equity space while we wait on the recovery, which we're expecting to be beyond 2023 versus a nearer-term recovery for fixed income. Real estate continues to be a suitable asset for pension portfolios. It provides stable, long-term, attractive returns. And therefore, we will continue our focus in the commercial development and investment in real estate. To just highlight a few, we expect that in 2023, we will have an investment in the New Brunswick Village, which is a mixed-use commercial and residential opportunity in St. Catherine. In Robert's presentation, he mentioned land for development, and we are also looking to develop a 30-acre land where we expect to create a landmark commercial hub also in the St. Catherine area. And as the year goes on, you will learn more and more about these investments. And we have a healthy pipeline, so there are other investment opportunities that we are seeking. While our commercial real estate opportunities and investments come to fruition, we also look not only to develop, but for opportunities to acquire real estate assets that have attractive rental income and yields, and also have high occupancy levels. So what we would call more seasoned commercial, while we await for the development properties to become more seasoned. So within the equity space, we would have said, we expect a slower recovery. But that doesn't mean we will just sit and do nothing. So within the equity space, we expect to adopt a more top-down approach. That is, we will identify sectors which we believe are resilient. I think Gregory said defensive. Fundamentally, we believe will perform well in the long run. However, as I mentioned earlier, we will shift to some amount of short-term fixed income focus within these portfolios to ensure that we provide enhanced returns while these portfolios recover. So our core tenets, really, when we look forward, sits on the back of what we would have done historically. We continue to look at risk mitigation. We continue to prudently manage our investment portfolios with a key regard to risk regulations, policies. We are also committed to continue our communication with our trustees, because it's important that as we continue to evaluate the environment in which we have to operate, that we keep in touch, we keep the message clear, precise, and keep just allowing you to understand the factors which are affecting the performance within your portfolios. Others have said that we take this business of managing your funds very seriously. And in allowing you to know that, communication will be key. So the discussions that you would have with Neil and his team will continue. We will continue to provide proactive management and information dissemination to you, our trustees, and by extension, the members. I mentioned earlier the changes in the regulatory environment, and it's important that we understand that as fiduciaries, the environment in which we stand calls upon us to manage our investments before us in the best interests of the ultimate stakeholders. That is something we are very strong on. And so I end with a quote. To stay ahead, you must have your next idea waiting in the wings. That is how Sagicor is seizing the opportunities. Thank you.
Thank you very much, Neil Kellyman, Robert McKenzie, and Donnet Scarlett. As Donnet says, to stay ahead, you must have your next opportunity waiting in the wings. At this time, we're going to be taking questions from the investment team of Sagicor. Remember, the mics are right in the center, so please, looking forward to your questions.
All right, morning. This question is for Neil. Could you just explain, maybe with some stats, the performance of the self-directed funds versus the Sagicor-directed funds?
Okay.
I'll just stand up here. So the performances are not wide because the same factors that affected the pool funds also affected the self-directed funds, all right? So the performances were kind of similar. Where you find differences is if a client probably have overexposure to equities versus another client who have more fixed income. So for asset class, the performances were pretty similar. Yeah?
Any more questions? I'm seeing a hand in the back. We have a mic right in the center. But let me get a little exercise too, because I get a little chunky. Can you also just let us know where you're from, who you're representing, and your name?
Hi, my name is Richard Clark. I'm from Central Medical Labs Pension Fund. And I have 3 questions. One, is the real estate expansion inelastic? Because we see so many buildings going up now, and I just wonder if it could come to a point where there's a crash or there's an excess in the supply. The second question is, the elephant in this room is the fact that someone or someone's could steal $2 billion from a government-monitored investment portfolio. With the resignation of the FSC manager, what has the agency done different to ensure companies like yours do not end up in the same situation like SSL? And the third question is, what is your next idea in relation to securing our funds?
So Mr. Zaka is going up. So if you remember all of the questions, one in relation to real estate, pretty much is the real estate market going to bottom out at some point?
I'm not answering all 3.
No, just reminding you, it's not common entrance, Mr. Zaka.
This old brain can't manage the 3. I want to deal with the prudence and security of the funds. So that cannot happen in Sagicor PIF. Impossible. We have a separate auditor in KPMG. We have all these funds segregated and held in trust. We don't control them as such in terms of the ownership. They're held in trust in the name of the pension fund or the PIF. And thirdly, the auditors, as part of their annual audit, confirm the holdings with the various pension funds, etc. So it is, and our technology around it, our internal audit, our various checks and balances, which I would never go into here, would make that impossible. Hope that satisfies you. Thank you very much.
We had another question before you take question, the question in relation to
yes, I'm going
property.
to answer, cover all three. I'll start with the last, which in terms of what's the next big idea in securing your funds. We are constantly looking at our operations. Mr. Zaka would have mentioned the regulatory environment in which we operate and the structure, the governance structure around our pool funds. So it's not a new idea. Prudence is old age. The prudent man rule says you are to manage people's funds as if it were yours. And so therefore, that is not new for us. That is how we'll continue to manage our funds. We're constantly looking at our internal controls to ensure that they're robust and they pass all regulatory and external scrutiny. With regards to the real estate portfolio, I agree with you and I understand the concern, because the fact is, on the residential side, what we see going up can be a little daunting in terms of wondering when will it be too much. So our focus, as I've said, is really in the commercial space. And what we're also looking to do, I would have mentioned the two more recent developments that we're looking at, and we are focused not only in Kingston, but we're looking throughout the island for opportunities. And there are different areas where we see those opportunities arise, and we will seize those opportunities. So we're doing a mixed use in Spanish Town, but we are not playing heavily in the residential space, which is where we think some of the fallout may occur. In addition, in our commercial spaces, we tend to engage our lessees early, and so we have a captive audience. We had a little challenge with the Millennium Mall because of COVID, but we believe that within 2023, we will see that mall reach its full potential. But primarily what we do is we speak to stakeholders, so we have people on board to step into the space once we're finished.
Okay. Thank you for that, Donette. I saw there was a question over here.
Question is for Mr. Zaka.
Remember, just identify yourself.
My name is Denise West, Lasco Financial Services. I'm a member trustee. Sir, you made a very profound statement a while ago to say that the question the person asked, you say it will never happen, it cannot happen. If I were you, I'm giving you a little free advice as an attorney, I would say we have put provisions in place to ensure that doesn't happen. But in the day of cyber crimes and hack and Silicon Valley Bank going down, they are one of the biggest tech investors. I would say to you, be careful of the statements you make, because all of us in here, we're very serious about our pension, and we're going to come after you. Love you.
Thank you very much. Any additional questions for the investment team? Willard, you go?
Yes, so I agree with you that maybe we shouldn't speak in absolutes, because anything can happen. But I just want to put one, yeah, clap yourself, it's a valid point. It's a valid point. But I want to put one more thing on the table that my boss was speaking about. One of the things that aided that situation, the elephant in the room, was that the information that was given to the clients were produced by the people in question. So what we have now actually strengthened and improved the ability of each one of you to go online and to examine your own statements. You do not need to depend on a third person. And that's why we're pushing the digital and the whole digital transformation to remove even that and give you that comfort and that power. Keep that in mind.
Thank you, Willard. There being no additional questions, just to again thank the investment team. Mr. Neil Kellerman, thank you very much, Neil, Mr. Robert McKenzie, and Mrs. Donette Scarlett. Donette had to have a glass of water. So why don't we just have a quick giveaway since we are here. And we're going to have an online giveaway as well as a giveaway right here in the room. And I have a very easy question for one of our lovely gift baskets. What is the current rate of inflation? I know that depends on the paper. That not depend on the paper either. Not on the paper. Not 7. No. Huh? I hear an answer over here that sounds close to it. Is 8 point? No, you know, as a lawyer, I like how you speak in absolute terms. It's 8.7%. No, it's not. It's 8 point. Come again. Not that. 8.2. You may like how you just hitch on for the answer. You never know though. What's your name?
Ruth Harris.
And you're from?
Tourism Product Development Company.
Oh, Ruth Harris from TPD Co. Please give her a round of applause. And for our online question, give the names of the 3 high-risk funds in the pooled investment funds. And while we wait to see who has won online. We don't want another prize, eh? I know. Quick one. This one easy. Give the names of the 3 investment presenters. What should I look on the program? You forget it. Yeah, man. Yeah. Give Denise a round of applause. So we're going. So at this time, we're going into some of our administration presentations. We're moving well with time. And our next set of presentations are looking at the Data Protection Act and your pension plan. And we have 2 great presenters. We have Ms. Sakai Campbell, who is Principal and Actuary of Telios Health. She has over 15 years experience in the life insurance and pension industry in the Caribbean, USA, and Canada. Her actuarial experience includes her previous role as Chief Actuary with responsibility to advise the Financial Services Commission on all actuarial matters concerning registered and licensed entity. And she currently collaborates with the multidisciplinary team at TELUS Health to provide consulting services to regulators and private sector clients. We also have Tejash Moody, TJ, who is a partner and practice leader with Regulatory Governance and Compliance Consulting, the Regulatory Governance and Compliance Consulting practice at TELUS Health. TJ is a lawyer, and he's a partner in the Ontario Retirement Solution practice. He's also a practice leader for the Regulatory Governance and Legal Practices at TELUS Health. He has contributed to training material on pension and benefit plan governance, multi-employer pension plans, and plan wind-ups. And he has provided trustee training and governance support to regulators, pension plans, pension plan sponsors in numerous jurisdictions, right here in Jamaica, Barbados, Turks and Caicos, pretty much all across the Caribbean. So we know that we have two persons who are able to give us some great information on data protection and you. Please give a round of applause to TJ Moody and Sakai Campbell, and I think some of the presentations may be on the screen, so drawing your attention to the screen.
Hi there, good morning. Now I'm going to take a few moments just to load up the PowerPoint here, so please bear with me. And hopefully you're able to see that. Now, first of all, good morning to everybody. TJ and I are so happy to be here. Thank you for having us present here. Now, TJ and I actually met with some of you during our online training sessions. So it's fabulous to meet with you again, and it's also fabulous to meet with an even larger group of trustees. So thank you so much for that. So we're here to talk about the Data Protection Act. And so as you know, it's a new law, and it's going to provide individuals with a new set of rights related to their personal data. Now, it's based on some regulations that are already in place in the European Union, but you won't be surprised to hear that since this law is giving individuals this new set of rights, well, that of course means that it creates compliance obligations for another set of folks, right? So we're going to talk about that together in some more detail. So before we get into the discussion though, there are some key terms that you'll want to be familiar with, right? So first one, personal data. And that's just information that people collect about you that can be used to identify you, right? So an easy one is your name. If people collect information like your name or your email address, then it's pretty easy to identify who you are if somebody else sees that data. But there's something else that's even more interesting is that term sensitive personal data. Let's talk about that. That's a special kind of personal data. And usually it should be treated with extra security. And if you think about it on a personal level, that's kind of the information about yourself that you kind of hold to your chest a little bit more closely. So for example, health information, that's information that you're even more, I'll use the term again, sensitive about getting out there, right? So there's personal data and sensitive personal data, which is its own special category. Now, there are two terms that you're going to hear used throughout the presentation, and I'm sure that each time folks will remind you what they mean. But just at a very high level, I want to mention that there's a data controller and there's a data protection officer. Both roles and the responsibilities are described in detail in the Act. But at a super high level, the data controller is the person or the entity that decides, what your data will be used for and how to process it. And your data protection officer is a totally different, has a totally different role, responsibility. It's involved in making sure that the data controller acts in accordance with what the legislation says. So you're going to hear more about those two terms later on, but certainly in order for this presentation to make the best possible sense to you, we wanted to introduce those four concepts to you at the start. So I'll stand back and hand over to the lawyer, over to TJ, who will walk you through the rest of the presentation.
Many thanks, Sakai. Can you hear me?
Hearing you beautifully.
Perfect. So before I talk about the slide, I wanted to say that I joined a bit earlier, and I'm loving the music, man. I'm loving the music. I'm loving the vibe in that room. I wish I could be there. We don't get that type of vibe in conferences over here, that's for sure. So thank you for that. So in the context of the DPA, there are a number of, as Sakai mentioned, rights for individuals, right? So there's a right of access or a right to be informed. And in that context, consumers, individuals have a right to contact the company to find out what information has been collected about the consumer. It's a fairly involved process that, and there may be valid reasons for having that information. The individual can also request that some of this information be deleted. And there is a certain timeline within which to respond to such requests and to comply with them. In addition, as I mentioned, that the consumer has the right to request that the personal information a business collects and processes be deleted. If it's not going to be deleted, there has to be justification for that. Certainly, one I think a very empowering provision is a right to what I call object or out of processing. So consumers have the right to opt out of the processing of personal data for targeted advertising, the sale of personal data, and profiling activities with personal data that may affect that individual. Right not to be subjected to automated decision making. So this is equally important, particularly in a pension context. So consumers have the right not to have their personal information used in automated decision making in the course of a business offering products or services. And last but not least, the right to rectification or correction, which essentially means that consumers have the right to correct information that may not be accurate in respect of them. Next slide. And really, the purpose of this presentation is very high level, given the time we have. So it's just to sort of walk you through some of the main aspects of the Act, and then, you know, really focus on how do you as trustees, how do you as administrators, investment managers, obviously as Sagicor, the steps to take to satisfy your obligation. So when we talk about standards, there are a number of standards, 8 to be exact, that are required under the Act, and the DPA requires the processing of personal data to comply with these standards. The first is fair and lawful processing. Data may only be processed if the subject consents to the processing of data, and this consent has not been withdrawn. For the processing of sensitive data, sensitive personal data, which Sakai referred to, the consent must be in writing. Then you have, data should be collected only for specified and lawful purposes and shall not be processed in any manner that is incompatible with those purposes. Third, personal data collected must be adequate, relevant, and necessary relative to the purpose for which the data is processed. Fourth, data must be accurate and kept up to date as necessary. The data shall not be kept for longer than is necessary and will need to be disposed of in accordance with the regulations. The Act outlines the rights of access to personal data, processing data for direct marketing, failure to comply with a notice. Then to protect against unauthorized or unlawful processing of personal data and to ensure that the commissioner is notified immediately of any breach of these security measures. There are proper measures, technical and organizational, that need to be instituted. And last but not least, international transfers. So similar to the GDPR, transfer of data outside of Jamaica is prohibited unless an adequate level of protection can be ensured. Again, this is, I think this is consistent with what we're seeing in many countries, including Canada. There's a huge proliferation, if you will, of information, guidelines, regulatory guidelines, and legislation in respect of, information broadly, as well as cyber risk. Someone mentioned it just in the prior presentation or in the comments component, but this is such an important area. We see it daily, right? That there are all these sort of breaches that are occurring, and private and sensitive information is getting leaked, whether it's financial or otherwise. That it's, kudos to the Jamaican government for obviously introducing this and requiring compliance, and this is just a step in the right direction. Next slide. So 2 things that Sakai mentioned, very, very important. So as trustees of pension plans and schemes, you have an obligation under the pension governance regulations, specifically Section 7U, to protect the personal data of all members and beneficiaries. And then even Sagicor, as an administrator and or investment manager of the pension plans, also under the same regulation, Section 9E has an obligation to keep, maintain, and safeguard in Jamaica accurate and complete records on all matters related to a fund or scheme. So for both entities, if you will, whether you're a trustee or you're an administrator and or investment manager, this is absolutely important. And within the context of those duties, you are a data controller. So a person or public authority who alone or jointly with others determines the purpose for which and manner in which personal data should be processed. There's an obligation to comply with the data protection standards in relation to personal data that's collected and processed, and to report to the Information Commissioner any contravention of the data protection standards or any security breach within this specified time frame of 72 hours after becoming aware of such a breach. Next slide. Hand in hand with this is what I think an even more important role, and that is of a data protection officer. So a major requirement of the Act is for each individual or entity that qualifies as a data controller to appoint an appropriately qualified person as a data protection officer, what we'll call a DPO. The officer, who is limited to Jamaican residents, an entity established and formed in Jamaica, or a person who maintains a regular practice in Jamaica, is responsible for monitoring in an independent manner, which I think is very important, the data controller's compliance with the provisions of the legislation. A further requirement of the DPO is to report any breaches to the commissioner within 72 hours of becoming aware of the breach. So again, you know, a data protection officer, a person responsible for monitoring in an independent manner the data controller's compliance, and ensure the processes are followed in accordance with those standards, and to inform the commissioner where there's been a breach. In terms of the implications for pension plans, I think it's fairly obvious. Pension plan administration involves processing a significant amount of personal data, date of birth, financial information for both members and beneficiaries, their addresses, you know, and given the broad application of the DPA, quite frankly, in vast amounts of personal data collected by pension plans, it's obvious that the DPA would apply. I think Sakai mentioned this, but just to reiterate, the DPA came into force on December 1, 2021, and entities have until the December 1st of this year to comply. Next slide. A really interesting one, of course, you know, what goes hand in hand with a positive obligation, a statutory obligation to do something, is what happens if one does not comply. So offenses under the DPA can lead to fines, imprisonment, personal liability, and civil lawsuits. The DPA imposes personal liability on directors and officers, and fines can be higher than the cost of initial compliance. So for corporations that are liable to a fine, or could be liable to a fine, for breach of up to 4% of annual gross worldwide turnover. So this is not a small penalty, and fines in the range of 4% can result in much higher costs than the cost of initial compliance. So this is not something to be taken lightly at all. Section 21 of the DPA speaks to the data controller's non-compliance with standards or failure to report a data breach, and can result in a summary conviction of up to 2 years imprisonment, or a fine not exceeding $2 million, or imprisonment for a term not exceeding 6 months, right? So the way I like to view this is, when we're talking about fiduciary obligations in general of the trustees, of the administrator investment manager, there are very positive responsibilities in the statute. And I said this in sessions we've given in the past, that I applaud Jamaica for making these requirements so onerous and so specific and express in terms of those obligations. And going hand in hand with that are the consequences of failure to comply. Last but not least, in terms of my part, I think, how can trustees prepare? So knowing all of this, there's a lot to take in. The Jamaican legislation in general, when we're talking about pension fund legislation and coupled with the DPA, there's quite a bit. So, obviously create a data protection policy aligned with the DPA's data protection standards. That's a given. Create mechanisms to respond to consumer requests, obviously in order to ensure those rights that I mentioned are satisfied and upheld. But I think perhaps the most important thing really is receive training on how the DPA impacts you as a data controller, data protection officer, and as trustees, administrators, investment managers, with respect to your duties and responsibilities that are found under the governance regulation at a bare minimum. There's a lot here, and obviously I'm speaking to a room of very bright, very committed, very passionate individuals. But given the level of risk that is associated with data protection breaches, this is something that needs to be given tremendous attention. And I would say it's not something to sort of put off, but to do it right away, particularly given that the compliance deadline is looming by December 1st of this year. On that note, I think Sakai, I'm turning it over to you again.
Yes, thank you very, very much. And the last thing that TJ touched on is the topic of training, the topic of ensuring that trustees are educated on their roles and so on, and the implications of their actions. And I always, during our online training sessions, just remind trustees of the fact that collectively, Jamaican trustees are responsible for 700 billion Jamaican dollars of pension assets. And I always say this, that that's a lot of zeros, but if you want to quantify that, that's a third of the GDP, a third of Jamaica's GDP. That's a massive responsibility, right? And so it's so important, of course, to use education as a tool to ensure that you remain on the cutting edge, that you remain up to date with what's happening out there, what you need to look out for, and to make sure that you're in compliance with this legislation, and that you also can anticipate what's coming down the road, right? So I just wanted to quickly talk with you, I just have a few minutes left, about our philosophy and our learning principles. There are 4 of them. First of all, time is limited. I know you agree with that. We tell us make sure that the content, the educational material that we share with you, that it is correct, it is concise, it is clear, and we keep it moving, all right? Folks are busy. They don't have time to spend, they don't have excess time to spend sitting in a training session. Another thing that we're really passionate about is that learning should be experiential. And that's a nice word, but here's what we're saying. There is a space for theoretical discussions. Absolutely. Theoretical discussions add value, there is no doubt, but we're also really committed to practical application of concepts. So case studies, talking about stuff that's happening in the news, talking about stuff that we anticipate will be discussed in the news. We consider that to be a really, really important part of our training sessions. And similar to that, interactions with other folks, learning from the experiences of other trustees who are in the room, learning from the experiences of the facilitators who've been acting in other jurisdictions as well. The 4th thing, and I think the most important thing, is that we believe that learning should empower you. The point of learning is, sure, we agree it's great for yourself, their self-actualization, but we believe that the point of sitting in a trustee training session is to equip trustees to do their jobs in the best possible way, to live up to their responsibilities as well as they possibly can. So with that in mind, we actually have put together some training modules in the past. Governance and administration, TJ has led 2 of them actually. We've had a session on investment. We've had a couple of actuarial sessions. We've looked at the risk-based assessment. And of course, TJ has led a Data Protection Act training session as well. We deliver them online, and we've actually got a progressive series of modules. So we start out with basic information and then ramp it up with each module to just ensure that we look at the roles and responsibilities of the trustees and provide the information that folks need to carry these out. And I'm going to end with something I'm particularly proud of, and I know TJ is as well. After all of our training sessions, we reach out to participants and ask them for their feedback in an anonymous survey. And 100% of respondents have said that our training sessions provide information that improves their performance as trustees. I'm very proud of that. And 100% say that they would recommend a training to other people, to other trustees. So I share all of that with you, and I say I have no doubt that you are going to do all you can. I have faith that you are going to do all you can to ensure that you comply with the Data Protection Act. And I thank you for taking the time to listen to us. But most of all, I thank you so much for the work that you're doing on behalf of your plan members. You have an awesome responsibility, and I thank you for taking it on. That's it from me. Questions?
Okay, the mic, take a break. It's back. Thank you very much, Sakai and TJ, for that very insightful presentation, Data Protection Act and your pension plan. We're actually going to take questions after the next set of data protection questions, so we'll just take all the questions together. Create a DPA policy, ensure there's the mechanisms to respond to the consumer request, and of course, this very kind of training that you're in. So our next set of presentations look at the strategy for your pension plan's compliance with the Data Protection Act. And we're going to be joined by Mrs. Chantal Davis, who is Manager, Legal Services, Group Legal Trust and Corporate Services for Sagicor Group Jamaica Limited, as well as Mr. Ben Rapp, Founder and Principal of Securis Limited. And Ben actually leads client engagement across the UK and internationally, and most notably with finance service organizations. He's the creator of Privacy Made Positive, the research project which uses economic and market research to show that there is a real return on investment in privacy. So please join me with a round of applause as we welcome Mrs. Chantal Davis, followed by Ben Rapp. Welcome, Chantal.
Chairman, specially invited guests, trustees, and Sagicor team members, good morning. I am pleased to be joining you this morning to introduce Sagicor's data protection strategy for your pension plans in light of the DPA coming into, well, not effect, but that we now have to be compliant with the DPA in effect on December 1, 2023. Before I delve into the details of our plans, I want to quickly provide you with an overview of the work that is currently being done by Sagicor generally to ensure its compliance with the DPA. Working? So Sagicor has commenced its group-wide data privacy and protection remediation plans, including the appointment of a data protection office for all entities within the group. We've commenced our audit of all of our policies, procedures, contracts, and notices within the group to assess where it is necessary to include data protection language and outline our obligations to our customers and ensure our compliance with the DPA. You can rest assured that your data is safe with us. So I won't go into details about the definition of the data controller because I think that Sakai and TJ managed that aptly. I'm sure you'll agree with me. They've also glossed over, well, speaking to the role of the trustees as data controllers. So as TJ pointed out, under Regulation 7U of the Pensions Act governance regs, the trustees, the trustees have an obligation to protect the personal data of all its members. So all pension plans process sensitive personal data, such as health information and criminal convictions. And for larger plans, this, along with just the sheer scale of personal data being processed, would qualify the trustees of these plans as data controllers. Under the Data Protection Act, therefore, the trustees will be required to appoint a data protection officer, and we'll speak more on this requirement shortly. Under Regulation 9E of the same governance regulations, Sagicor, as well as Employee Benefits Administrators Limited, each have obligations to keep, maintain, and safeguard accurate and complete records of all matters related to a fund or scheme. So as a result, under the DPA, these companies will be viewed by the Information Commissioner as joint data controllers, along with you as trustees. And as required for all trustees, must appoint a data protection officer to ensure that it's meeting its obligations. So Sagicor has appointed Securis Limited, of which Ben is the principal, as its data protection officer. So, among other things, the main role of our DPO, is to ensure that Sagicor meets its obligations to you and to the members of your pension plans as joint data controllers under the DPA. These obligations will require us, for example, to process the personal data fairly and lawfully, ensure that the data is accurate and up to date, and protect data appropriately, with particular reference, of course, to sensitive personal data. So now to the meat of the matter. How will we, as Sagicor, be supporting you in the transition process to ensure your compliance with the DPA? Sagicor has developed a data protection program aimed at providing you with a full-scale plan for implementation by or before December 1, 2023. These steps will include the amending of our pension administration and investment management contracts to include all data protection obligations, the amending of the member handbook to outline to your members their rights as data subjects, the preparation of privacy notices for each plan that you will then share with your members, as well as the introduction of a data protection policy which outlines the obligations of the trustees as well as Sagicor as data controllers. Your role in this implementation process will be simple. Unless you opt out of the program, the contracts related to your pension plan will be amended and will require your adoption, of course. You will also need to review the privacy notices prepared and then share those with your plan members at the appropriate time. Then finally, you will need to accept and appoint Sagicor's recommended data protection officer as the DPO for your pension plan. So to speak more on what this element of our program will look like and how it will operate, I'm going to hand over to Ben, who's joining us virtually, and he will speak to the Data Protection Officer as a service. Ben?
Thank you, Chantal. If you can move on to the next slide, let me begin by introducing us and talk a little bit about what we do. And then we can move on to discussing how this is going to work in the context of your trustees and the relationship between their plans and Sagicor. I'm not actually seeing the slides at the moment, I'm seeing myself, so I don't know if we've got the deck up or not.
No, they're showing you.
Oh, there we go. So first of all, just talk about Securus. We are a global privacy consulting firm. We work in about 50 countries. The Caribbean is a particular area of focus for us. We are working with Sagicor across the whole of their Caribbean operation to produce a single coordinated and pan-Caribbean privacy office that gives you the certainty that wherever data is processed within Sagicor, it's being done in accordance with all of the regulations that will apply, not just Jamaica, but also the other Caribbean privacy regimes and, of course, the GDPR. We've done this for a large number of scale organizations globally. We have a particular practice in financial services, so hopefully you can be reassured that we know what we're doing. Part of our focus on delivering privacy compliance is to treat it as a practical challenge. There is a danger of seeing this as a legalistic box-ticking exercise, and I think while you can satisfy regulators to some extent, you're not actually serving your members by doing that. So the focus here is on genuinely mitigating the risks of harms to those members and ensuring that they're able to exercise the rights that they're given without getting in the way of delivering effective pensions administration and the maximized return to those members, because really that's what they want from their pensions. We can move on to the next slide. There we go. Let's talk about how this is going to work. The plan is to implement a common privacy policy that binds how Sagicor will process your data. So this works only if you have delegated the processing of personal data to the EBA unit within Sagicor. If you're doing a blended operation where you do some of the work yourselves, then there'll have to be something slightly more customized. But in a situation where you're a straightforward client, you will dock to use the phrase, their privacy policy and framework, which is part of the broader policy that we're building. That will come with, as we said, a standardized privacy notice. It will come with updates to the member handbook, and it will come with an extension to your existing service contract with Sagicor that covers the necessary data processing addenda. You have to have in that contract some specific language that talks to how each of you is going to process data, because both of you are controllers. You're both making decisions, and you have to have an agreement between you about effectively where the boundaries lie and how the data will be used. We are acting as Sagicor's DPO, and if you dock to this framework, then we are able also to act as your DPO. We will be holding both you and Sagicor to account to ensure that you abide by these policies and that you conform to what it says in the agreement. As part of that, we act as your liaison with the Office of the Information Commissioner, so we will be the first point of contact for them, and we act as your liaison with members, and we'll be the first point of contact for them. So we are there to provide that interface between you and the regulator, between you and your members when they want to exercise their rights or have questions about how their data are being processed, and also to hold you to account, and also to report to you on how your data is being protected, or your members' data is being protected, to put the ownership where it belongs. So we take this oversight and governance role, which is really what the DPO is for, but we also take away a lot of the administrative burden involved in dealing with members and dealing with the OIC. So as long as you don't opt out, and as long as you have this straightforward relationship, and this applies both to the pensions administration aspects of EBA and then the fund management aspects within SLJ, the point about fund management being that the volume of personal data being processed is much lower. This is predominantly about investments rather than people, where in pensions administration, that's where the heart of the personal data processing lies. That's the basic plan. We are well on track to have everything in place before the target date, which is technically the 30th of November, so that you're live on the 1st of December this year. There will be more information forthcoming over the next couple of months to give you a clearer understanding of exactly how it's going to work. But I and Chantal are very happy to take your questions starting now. Thank you for listening to me.
Thank you very much, Ben and Chantal. Do we have any questions? And please, online, send in your questions. Denise, no questions? Okay. It's Denise approved.
Yes.
Okay.
Thank you.
So there being no... Oh, I see a question.
Oh.
Remember to identify yourself.
Okay, my name is Glenn Warren, a trustee, and I also work as pension fund manager somewhere. This question is not specifically for the presenter necessarily, but for Sagicor. I know that a lot of us trustees here are associated with Sagicor in some way. However, does Sagicor offer this training to trustees generally, specifically trustees not associated with a pension fund managed by Sagicor or so on? Because this is certainly something that is needed, you know. It might be a trustee that is not even associated with one of the major providers, one of the major administrators. Does Sagicor offer that service, and how does one access it?
I think that might have actually been a question for Latoya Mayhew-Kerr. I'm going to ask her to...
Actually, which is why I said it's not
That's
necessarily
right.
for the presenter.
Latoya?
Not a problem. So Latoya's going to provide you with a response.
Okay, hi Glenn. So currently the program that we offer for trustee training is really for our trustees. We haven't ventured out to offer it to the public as yet. So we're focusing on empowering our trustees at this time. Perhaps in the future we can look to widening that, but for now we're
maybe an opportunity for someone?
Perhaps.
Well, the theme, Glenn, is meeting the moment,
Just one more
seizing the
question.
opportunities. So I see you creating opportunities. Thanks, Glenn.
Morning. My name is Johan da Costa from Jamalco, member trustee. I just have one basic question. How will the cost be covered for this new service? Where will it be coming from?
That's a very good question, but I think I'm going to direct that one to Latoya once again. I always tell her she handles the money.
Okay, so you're absolutely right that this type of service could not be free because you'd have to get legal resources and you have to pay a data protection provider. But you would agree that even if you didn't use Sagicor, which is optional, you'd still have to go and consult with an attorney and get this service outside, right? So the fact that we're able to use a large number of plans, as you know, we are the market leader, so we'd have the large number of plans. And if all our the pension plans opt into our program, obviously that would reduce the unit cost. So we are hoping that, having heard from Ben and Chantal, and based on the additional information which we are going to provide, so this is just a kickoff of the program, okay? So you are going to get very detailed information as to what our program will entail, what you're getting for what the service is that you're going to get from Securis, and exactly all the minor details, and you can make a decision as to where you want to land. But the point is that we all have to comply. It's very new, but just as how we took you through the Pension Act, you remember we walked you through that process of getting compliant. We're going to do the absolute same thing for the Data Protection Act. So you have no need to worry or fear. We're going to take you through. Okay, and where is the money coming from? Obviously, sorry, your pension fund would have to cover that cost, okay? Security is in the United Kingdom, yes, yeah.
So those seem to be our questions. So thank you very much to all our presenters on the Data Protection Act, Sekai, TJ, Chantal, and Ben. Just to announce, our online winner is Helen Christian. Congrats, Helen. And Nordell, we did hear your comment that the online question was harder. So we're going to have an easier question for the next set of online. And since she's already been on her feet, a lady who is no stranger to all of us here, Mrs. Latoya Mayhew Carr, General Manager, EBA, and Vice President, Sagicor Group, Jamaica Limited, will now do the administrative update.
Okay, good afternoon, trustees, Sagicor team members, family. Welcome, and thank you so much for coming. For about 2 or 3 years, we had a seminar, but we were talking to an empty room. It was just a few support team members in the back who kind of made sure that we kept focused. But we were missing you, so it's so good to have you here. But again, COVID has also taken us to the next step. So now we have a virtual space that we're very familiar with. So we are able to have over 200 trustees join us online. And again, that is something that we still have their presence, although they're not here physically with us. So we are appreciative and want to thank you again for joining us. I'm not seeing my presentation. I have to get it up first. I'm not seeing. Okay. Thank you. Okay, so as trustees, we want to assure you of our commitment to you and to your plan members. And everything that we're going to do, everything that we have done so far and we're going to do in the future, really has you at the center, right? Now, as you see there, we don't just consider ourselves record keepers, which is what we really do, record keeping, but we consider ourselves as guardians of the dreams of your members, right? We want them to retire in dignity. We want them to retire with a wholesome pension. We want them to enjoy their retirement, have time to go and do whatever they want to do in retirement. So that's what we look at ourselves as doing, not just keeping paper, right? So we take it seriously, and I just want you to know that. Now, I think Trustee Clark would have brought this matter up of the elephant in the room, right? So we have been seeing an uptick, a slight uptick, albeit, in the number of members who are reaching out to us with questions about their pension, right? And fundamentally, they want to make sure that it is what it is, right? That it's safe and that everything is okay. And we believe fundamentally that trust is built on transparency, right? So we want to make sure that you know that there's an arsenal, there's a toolkit that you have access to that can give your members the comfort and that can give you the comfort that things are the way they should be. Now, first of all, so we see it not as a challenge really, but as an opportunity to engage those members who are on the fringes, members who you may not have necessarily heard from or have anything to say. All of a sudden, everybody wake up now, don't it? Everybody want to know their money, how it go, right? So I wanted to use it as an opportunity to reach those members and lock them in, right? So you have online access through the website, My Sagicor, and also My Sagicor app. So a member on their cell phone, any time of day, any time of night, they can wake up and check their balances. They're actually seeing what's on the system, okay? So they can have that comfort that they're looking into Sagicor to see what's going on. Now, this is your window and their window into seeing everything. So they can see their beneficiaries, they can update their beneficiaries, they can see the contributions, so that it come out of the pay, they can see that it come into the fund, right? That's ultimate in transparency, right? You have reports there as well. The annual report is there, so every year after you sign off on the annual report and it's submitted to the FSC and TAJ, we actually post it there. So they can actually go and look and see what is happening with the fund in detail. They can see how the fund is being invested, how the administration is going, how many members, what are the benefits. They can get a full overview of that, right? So we encourage members to go on. We also have the member statements there. So they can actually see 3 years worth of member statements and keep track of their progress towards retirement. They can learn about follow up on their replacement ratio. Now, who can tell me what's the replacement ratio? This is not a trick question, because your members, you need to be able to buck up Neil and say, Neil, what's your replacement ratio? And Neil's supposed to be able to tell you. So what is your replacement ratio? Correct, Magda, right. So it's the percentage of your salary that you're going to replace at retirement, and the maximum is 75 under the law. Thanks, Magda. So somebody can give Magda a clap? and maybe a basket. So that information is stuff that we want the members to know, because that's the ultimate, what you're going to get, what percentage of your salary you're going to replace at retirement. You need to know that number, and your members need to know that number. We don't want any surprises. So somebody gets into retirement and say, is that it? No, we want them to know and track it, right? So that information is there. We also allow them to generate statements on the fly. So they can press a button for the defined contribution plans and generate a statement that shows them exactly what's on the system, right? And they can match it back to the statement that they would have seen there. It's ultimate in transparency, right? The trust deed and rules is also there. That's one of the things that we did in 2022. So we've uploaded your trust deed and rules so your members can go on and see the rules for themselves. They don't need anybody to translate it for them. We're working on putting the handbook there, but for the time being, we would have emailed out your handbooks. Granted, they're gonna be revised before the Data Protection Act, but they would have a handbook in place, right? The PIF reports are also there. So we really want you to see that you can be confident in addressing your members when they have any questions about the security of their pension plan or what's happening. You have the information. And if you need any assistance, we are there. And also remember that you have the member sessions. We love to come and see your members, whether in person or virtually. We want them to come out to the sessions, because that is where, when they have somebody to look in the eye and say, Neil, how the money go? You understand? They have a face behind the company That's important. So we're encouraging you, please, bring us in. We want to come, just schedule it, work through with us what kind of arrangement. If you have a big company you want to bring us over a period or you want to bring us on one day, please, let's just work through and get that face-to-face interaction, whether it's online or in a meeting room, maybe the lunchroom or wherever, right? So what were we up to in 2022? One of the first things that Mr. Z would have mentioned would have been the Sagicor Plus, right? No, we've moved away from the paper proof of life. No, it's based on an honor system. So somebody has to go to a justice of the peace or a notary public if they're abroad and say, here, I am alive. Please sign the form and verify that I'm alive so I can get my pension. But we know that's infallible. That's not infallible, right? Because somebody can go to the JP and say, boy, daddy's sick, you know, and he can't come out and just sign this for me when the person has actually passed, right? So we are moving away from that to make sure that the money that is being spent is being paid to the person who is eligible to get the benefit, right? And this is particularly important for the plans that pay out of their fund. There are a few that do, so we want to make sure that the money is being spent properly, right? And nobody's trying to scam. You know, we have a scamming thing in our society, right? We don't want scamming to infiltrate. So we're moving away from it completely. Now, how it works is the pensioner they literally just jump onto the link, put in certain basic information, which we use to authenticate them, and then the computer actually matches certain points on their face. They actually take a selfie. It matches certain points on their face with an ID that they would have uploaded. Or just take a picture of the ID. That's really what we call upload, right? They take a picture of the ID, and it matches the points on the ID with the points on their face, with great certainty that this is the person who we say they are. Now, once that is done, it updates Topaz, which is our core system, and voila, the member is active, is basically told, great, congratulations. And then they get the opportunity now to update their information. Now, that's important because you might be surprised, but a lot of pensioners move around. So they move from relative to relative, you know, so we want to be able to keep in touch with them. So we do allow them, so it will take the update and send it straight into Topaz, right? Now, this is the first of its kind in the Caribbean that proof of life is being used in this way. And it's a big deal, guys, really big deal. Our head of innovation, Andrew Burke, Vice President, somebody saw it actually from Biometrics Institute in London and was very impressed with what was happening. We shared some information and they would like him to come to London in October to present on our biometric program. And we're very happy about that. We're really at the cutting edge of technology, and we want to remain there because we know that it's going to benefit you and your members. Now, what typically happens, person have to go and find a JP. You have to go find, not even maybe the pensioner, but also the caregivers sometimes have the burden of trying to find somebody to authenticate them, or they have to come to a Sagicor office. No, all of that is gone. So we're very happy for it, and we're going to ask you to help us to get the pensioners engaged and on board. As Mr. Z mentioned, over 1,000 pensioners have validated so far, but we want all of them on the program as quickly as possible. The other thing that we did last year was the automation of the termination and retirement benefits. So you remember that in the past we used to have the whole paper thing. Now, you as HR for the defined contribution plans would go online, authenticate yourself, and you can actually select who you want, who is leaving the company, and you put in certain basic information, and voila, the member gets the information and notification about the benefit options, right? So that has really changed things. And we're very happy for that. I'm happy and thankful to you all for embracing the technology, jumping on it so readily, and actually, getting the benefit of it. We're really pleased with that. Want to thank you for that. And we're also continuing. We did the program with Now Tell Us, and we are encouraging you to come on board for 2023 as well, and also enroll your HR directors, because they need to be aware of what's going on. Not just you as trustees, they are supporting you, and you want to make sure that they're empowered and they know the law and they know the different legislation and how the trustee and rules work, and you want to empower them as well because they're your right hand. And let's be frank, if errors occur, they can cause trouble, right? So you want them to be fully abreast of what's going on. So we encourage you to enroll your HR people. We have 35% of the members who have downloaded the app so far. In real terms, that's pretty good when you look at adoption rates, but we want more, right? We're greedy, we want everybody, right? So we're encouraging you to get your members all of your members on the program. And the truth is that we're not done yet. We're gonna move on for the benefit payments aspect of it. So what has happened is we've automated the benefit options, and then we have them flying out the door to the companies, and then we have them flying in fast back to us, right? So they're coming in so fast that we're struggling a little to keep up with them. So we want to automate the entire process. So when a member, HR director, enters the request, the member selects their option, it will go straight into the payment portal, and then the money shows up in their bank account. Now, of course, we're gonna have the appropriate controls, the appropriate checks and balances, the appropriate correspondence to you as usual. Everything that you would normally get, the auditing, all of those things would be happening in the background. Little elves will be doing that just to make sure that everything is okay. But the point is that we are moving away from the normal, how much days that you'd have to wait. So wait, nobody not clap me? Right? So I think that's a big deal. Nobody else is doing this, as you would know, right? So it's a full end-to-end connection that we're working on this year to take it to the next level. And actually, when we're done, you're not going to recognize it. The process is going to be so super easy, quick, totally revolutionized. And we are very excited. The team is actually chomping at the bit to get this out to you so that we can actually feel the impact of it right down at the member level. Now, Chantal and Ben would have spoken about data protection strategy, so you will be hearing more from us as it relates to that in great detail. So we will send you a proposal, which you can accept or reject. But to make it easier, we would ask you to opt out if you're not interested in the program, rather than waiting for everybody to send back the paper, right? So we'll give you a time frame within which to opt out if you wish to opt out, and we move forward with those who would like to move forward. But it's obviously not obligatory to use our program, but we would recommend that you do find a program that you can work with to get it done. Now, if you want major customization, so obviously we are preparing a package. If you want more than we are giving you, that is absolutely okay. We encourage that. If you want more, we can give you the more. So we will sit down with you and micro work that through with you for your own comfort. But just to let you know, we're here with you, and we're going to help you to get through that as quickly and painlessly as possible. Money In, so that's a name that you're going to hear again. So this is a huge project that Sagicor is embarking on, and it's not just for pensions, it's actually group-wide. So some of you right now would have health insurance with Sagicor, you have life insurance, pension, and maybe some of your members have individual life policies that you also pay for. So we're going to make you treat us like one Sagicor, because I know you find it annoying to cut 2-3 checks or send in 2-3 payments by electronic transfer. So you will be able to treat us as one company. And so it will collect the money, receipt it, invest it, and so on. But the beauty about this is it's going to the next level of actually going to the member level. And that is where we're blowing everything out the water now. So it will actually, so you, in sending the data to us, you will actually send a listing. The listing that you send now, that you send separate from the EFT, you will literally send those two things together. And it will take the information and put it straight into Topaz at the member level. So you can log in the next minute and look in and see the contributions right in the member's account. Now, obviously, there might be an exception to that, where your new members, anybody you're enrolling, maybe we haven't got the card as yet, but once everything is in, absolutely everything would go straight in. Nobody needs to touch it. We're just going to look at it to make sure that everything look okay. But this is like top level now, guys. I'm so excited because all of the, there'd be a little delay. No, right? When you send it in to us on, even by email, somebody have to convert it into a file and then upload that file. We have to make sure it's right. We have to cross-check and somebody else look on it and sign off. Yeah, literally, it's just like a 1-2. So we are very happy for that program. And it's actually being driven from the board level. So it's going to come through and it's going to come through real fast, right? The resources are being put behind it. So we're very happy for that. And so just stay tuned for more, so you'll hear more about that coming up. The DBs, now I don't want my DB clients to feel like we're leaving them out, right? So we are actually turning our attention to the DB plans this year as well. So we've actually started the project, so it's in development now, to the determination benefits for the DB plans. So you will also get piece of that excitement of just jumping online and putting in a thing and it come out and the member get it and gone and don't have to come back to your office. Like, we're doing it for you as well. So that's the focus for this year. It's on the strategic initiatives that Mr. Zaka is watching, so it will get done and get done very quickly. The next one is my retirement planner. Now, there was a data innovation challenge in Sagicor, the very first one, and EBA, our team won the challenge. And so everybody liked it so much that they wanted us to actually do it. So it's not a theoretical win, but it's a real win, right? So we actually have the funding, we got the funding in the budget to actually do it this year. Now, what is my retirement planner? It's really a personalized roadmap for retirement. So, anybody, Magda? I think I'm retired already, Magda. So a member can, right now, once it is in place rather, they'll be able to go in on my retirement planner and see exactly where they are, because it's going to pull data straight from Topaz. It's going to say where you ought to be based on that maximum that we discussed, right? And then if there's a gap, it's going to suggest what you can do to bridge that gap. So it's almost like a breadcrumb trail to make sure that you're at an optimal place when you get to retirement. So it's different from anything else out in the market. It's going to allow some social interaction between you and other persons who are tracking their retirement aggressively. No, I can't promise you that all the features will be in the first phase. We're doing an agile method, but we will get there to the ultimate in terms of keeping it interactive and engaging for the members. So we don't just want something static, but something that excites them where they can go on and check it and see how they're performing, right? And we're very competitive, so we want to put in some things to kind of make it exciting. If you hit some goals, we'll send you a little token on Amazon or something like that, right? So we have some big things in store. Just hold on to your seats and, come on the ride with us. The new member statements, so we're actually starting the issuing of those statements in April. And what it will do is remove the focus from the cash, because that's predominantly what's been happening, right? Everybody leave and take their money. And then what is the outcome? A suboptimal pension at retirement, right? Because you've extracted some of the value as cash. So we want to change the focus, we want to change the behavior by putting the preservation up front, putting the retirement projection up front, putting the replacement ratio up front, and then put the cash at the back, right? Because we want people to look at what will my retirement be looking like. That's what we want the objective to be, rather than how much cash I'm going to get to spend, right? And then finally, that voluntary, that persons may or may not be paying, we're going to show you where you are and where you could be if you are not paying the maximum. So really, we're trying to build out a full circle picture, kind of giving member information from all angles so that they can understand where they are, where they need to be. So everybody's fully equipped and aware of what's happening with their retirement. And of course, we're going to continue to work with LifeWorks now, tell us. And so you'll hear from us again. Usually we start that campaign about June or July. You'll see the emails coming from Thelma. Guys, please, if it's possible, if you can't send all your trustees, send one, send two. And so you'll get that exposure to the information, because particularly where the paradigm is shifting with data protection, you want to be in the know, okay? So we're encouraging you, please, to come on board and enroll your HR people. All right, electronic voluntary campaign. So we are actually launching that today. So we're actually ready for you. Now, what this is a real quick way for members to indicate to your HR department that they're willing to increase, they're ready to increase their contributions, they're voluntary. No, it's gonna make it very simple for you because the member will simply go on, say that they want to, they're gonna read some information, we give them some education, yeah? And they can say, I want to increase my contributions. They can select the percentage that they want to increase it by. And literally they would submit that and it goes straight to your HR department, to whoever you designate. So right now, we have some people in mind who would have been using Sagicor Connect. So we have them as your designate. Now, we're gonna tell you who that is. And if you feel you want somebody who is closer to the payroll department to get that information, you can tell us and we'll update it, okay? This is on the voluntary system. So what that means, it takes away that backing and forthing. You're gonna get a copy of what the member has decided. We're gonna get a copy of it so we can follow up with you, and the member will also get a copy of what they have decided. They can put a now date or a future date. So say you don't feel you can do it now, but you think you might get a little increase in April or May, you can put it for a future date, right? And so we believe that this is a way we can actively get people moving in the right direction without creating work for you and your HR team in, a lot of paperwork. And we believe that this will help. Now, the other thing it does is if the member says, no, I cannot increase my contributions, we actually ask them why. And the reason we ask them why is we want to know, we don't want to make any assumptions, because finding out what's going on in their head is going to help us to craft the next set of push that we do. So maybe we need to change the collateral. Maybe we need to address a different question. Maybe we need to come at it from a different angle to get the outcome that we want. So there's a built-in survey, just answering one question. If you say no, why, right? And they can click a button because we come up with some reasons that we thought of, but there's a other that they can fill in the reason why. And why this is so important is because we check the stats. Thank you, Lucretia. And we have actually retreated. So remember, the voluntary contribution was about 47%. We dropped to 46%. I know it might look a little bit with just a 1%, but it's a big deal, right? That 1% we work really hard to get. So to fall back 1%, it hurts me. So we really have work to do, guys, because I know COVID and, people might have been in a crunch and need to stop because they have other concerns. But this is not going to go away. If we're alive, we're going to need the money. And chances are we're going to be alive. People are living longer. We're going to need that income, right? So we don't want to make a decision now that's going to impact us 20, 30 years from now in a negative way. So we want them to keep on the train no matter what, right? And so when we send out the campaign, we're going to ask you to support it because clearly we're seeing a regression in the population for the importance, because to me it's a priority matter. And the data supports that because we actually did a survey to find out why people are not interested. And it is not a matter that they can't afford it most of the time. It's because it's just not important. It's just not important to them. So we have to ratchet up the importance and get them to understand why this is so important. When I see a man retiring off of his balance is 500,000, and I know within my heart, it could have been $1 million if he had just paid in that extra money that he's not going to feel. I feel it, my PAs feel it, the team feel it, because we know it wouldn't have made much of a difference in the actual paycheck. But we have been, I don't know for whatever reason, they were denied opportunity, maybe on their own, to put that extra money in to make a big difference. It really hurts. And even if it's a cash thing, even if it's save and they're going to take back the 500,000, it could have been $1 million, just like that. Yeah, so I might speak very passionate about it because I am, because I see a missed opportunity. So we're going to push out the campaign. I want to encourage you to rally behind it, and let's see if we can get the members back on train. Those that drop off the train, try and get them back on. Okay, so we spoke about Sagicor Plus already. So we launched it December 16, but we actually did a couple more improvements for the experience for the pensioners. So one of the things we did was they're able to magically, I don't know how it do, but I just telling you what happened. They actually can detect the type of device that the person is using, right? And they can say to the person, this device, you might need to use a different one. It can tell the type of lighting that they're using, that it's substandard, and might say, you need to go find like a sunshine or some kind of light where you can take the selfie. The other thing is that there are some pensioners who like to do the validation so much that them do it not just once, but twice or 5 times, right? So we really don't want them to validate 5 times. So we actually said to them, if they try to do it again, it's okay, you're all good for this year, check us next year, you know? And also send them a congratulatory message when they have actually validated successfully. We just put that in. Now, on top of that, what we're gonna do next is change instruction or augment the written instruction that's there now when they're taking the selfie or taking a picture of the ID. We're gonna put it in Word, have somebody voice that instruction, because again, we're dealing with pensioners, right? Not all of them see so good. So we're going to make sure that they can hear the instructions so they can move faster through the process. It's quite simple. In fact, one of our trustees said that the longest part of the process was she had to go pretty up herself to take the selfie, to make sure that she looked cute, you know? So they're enjoying it, but if you're any of you are pensioners or no pensioners and have not done it, we're gonna ask them please to join the Plus Way of Life. And I'll ask you to just watch this experience of a pensioner who has actually used it. Miss Valerie.
Sagicor Group Jamaica, through a partnership with the Sagicor Innovation Lab at the University of Technology Jamaica, UTEC, has implemented a first-of-its-kind facial recognition technology in the proof-of-life process for pensioners called Sagicor Plus.
In my own experience, having signed on to the biometric technology, or for easier, facial recognition technology, it has become so much easier. First of all, it's easy to sign on. And like a senior citizen, like most of the persons, you say, what another technology I have to be involved in, and it's complicated and all of that. And there was great hesitation on my part. But I must tell you that once you get onto it, it's really a simple 1, 2, 3.
This integration of technology aims to revolutionize the way pensioners prove their continued eligibility for pension payments by easily and conveniently proving their identity at any time and from anywhere in the world.
So once you reach that beautiful age where I am at, then the biometric technology or the facial recognition technology is available. It can be anytime in your own space.
The requirement for pensioners to visit a justice of the peace or notary public and have a physical form signed is replaced by this simple and secure process with the use of a mobile device or computer.
It means that you do not have to leave home to get it done. Anytime you are at home, any hour that you remember you have to do it, you can pick up that telephone or get onto your computer and complete the process. No third parties involved, so you are in full control. It's just super convenient and easy. And I really feel that the effort must be made to become part of that movement of getting things done with ease and efficiency.
For our pensioners, it reduces health risks associated with in-person interactions and saves on traveling expenses and time. And for Sagicor, it reduces the risk of fraud and errors.
I know from experience that Sagicor is always looking for new ways of making it easier to do business with them. And this is from personal experience and the people around me. So I know that this is just another step in that process of making it convenient. It's really a wonderful innovation, and I think it's something that everybody should consider. Once you have arrived at that wonderful age where you are lucky enough to be getting a pension, then this is an easy way to get it done. And I'm speaking from 3 different experiences. One from the pensioners from JBDC, and Sagicor administers our pension plan. also as a JP, Justice of the Peace, who has been asked by numerous persons to sign on their life certificates, which are required every year. And from my own experience as a new pensioner. So I am 100% in endorsement of the process that is now underway for us.
We welcome your pensioners to the Plus way of life.
Awesome. All right, so I'll tell the team that you like it. All right. So, just to say why we chose facial recognition, it's all founded in data, right? So we did the UI, what we call UI UX team actually did a poll of the pensioners, our own pensioners, yes? And asked them, which solution do you feel comfortable with? And they overwhelmingly said that facial recognition is what they felt comfortable, and that's what they would want to use. And we asked them, would you be able to get help to use it, or would you be able to use it yourself? And over 70% of them said they can either help themselves or they would have somebody to help them, right? So we felt comfortably moving forward, and we feel like we're going to really hit the target of getting 100% validations within the shortest possible time. And I hope you're seeing, ladies and gentlemen, that we really care about our pensioners, right? All of us want to work hard, and when we get to that point, we can be comfortable. And we really are focusing on that at Sagicor. So I'm not sure if you're aware, but when COVID hit, we actually started to pay the pensioners earlier than normal. We'd pay them after the 25th thereabouts. We moved that up to the 20th, latest the 21st of the month, because we wanted to get them away from the traffic that's, the month-end hustle and bustle. And now we're doing this because we know that they are the most vulnerable when it comes to diseases and so on. Ministry of Health tell us that, right? So we want to take care of them, and that's what we're really focusing on. In addition to what we're doing for the active members, we are also looking at the pensioners. So this second to last slide. We are launching our Pension Service Hub today. Now, what is Pension Service Hub? You realize that we have a whole heap of things going on, right? And a whole heap of things coming at you. So we're putting it in one place, right? It's going to bring everything together for you. So you can find My Sagicor there. You can find My Sagicor app there. You can find Sagicor Plus there. If you leave the company or somebody you know leaving the company, they can actually buy pension, individual type, approved retirement scheme arrangement called Sagicor Lifestyle. They can actually log in and buy it there, right? Apply for it, apply for the product. You're gonna find education information. So we have a huge audiovisual catalog, because nobody wants to go read not much nowadays, right? So we have it in video format. Everybody will go on the Instagram and the Facebook and watch the videos nowadays. So we put stuff there, so your members can go on and access that information. And the voluntary campaign will also be there, or is there actually. So we're giving you one tool that you can send out to the members, and we are going to send it out for you as well, and you can send it out, which will give you a door to a universe of things. And we're going to keep adding to it as we evolve and grow, right? So this is going to be our little hub to keep everything in one place. So you're going to get that coming to you very shortly, either within this week or next week. So finally, trustees and HR reps. We're doing everything that we're doing. I hope it's clear to you that we're keeping you at the center, you and your members at the center of everything that we're doing. Every decision that we're making is based on serving you and your members better, right? We don't take our job casually. We're very serious about it. We know that what we're doing is important to you, for your peace of mind, for you and your members. And we're excited about where we are. We're excited about the vision of where we want to be. And we're even more excited about partnering with you on this journey as we move along, okay? So thank you for your confidence in us. Thank you for your trust in us. And we look forward to partnering with you as we work in 2023 and beyond.
Thank you very much, LaToya. Do we have any questions for LaToya from this very comprehensive presentation? I see a question. Oh.
Derek Solo, JPS Pension Fund. I want to commend you on an excellent presentation.
Thank you, Mr. T.
I can see you turning visions into reality. However, I'm asking you for some assistance for the 30% of those pensioners who do not have technology. That can you send out the life certificate for them, please?
All right.
And the transitioning is critical because they call from time to time and they cry, they're being left out, and I know that's not the intention.
Yes, correct.
So I need for you to go back to the drawing books and try and reach that 30% for me.
Okay.
Thank you.
Thank you, Mr. T. So we don't want to exclude anyone. We know there are some pensioners who may not have a device. They may not have a relative with a device. So if they are able-bodied and they can visit a Sagicor office, they're welcome to do that because the team members there can assist them to do the same. They can hold up their phone at the face, as in a Sagicor device, at the people's face and take the picture and get authenticated, yes? Because the truth is, we do want to move away from the paper. However, I recognize that there will always be exceptions, right? So, but we don't want to encourage the paper because we have some scammers in the place. And the people who will resist it the most, let's be honest, are some of the people who resist it are the ones who have ill intent, right? So we have to transition to protect all the stakeholders, right? If you're paying it out to your pension fund is paying somebody who is ineligible. And we don't want to encourage that, right? We want a clean break from anybody who is doing something that they're not supposed to do. So, yes, Mr. T, we will accommodate people coming into the office to do it, and we'll assist them. And on a rare exception, we might do the paper, but it's on a case-by-case basis.
Just one point. Is there a newsletter that will go to tell people that they can actually go to their office? I haven't seen that correspondence.
Okay, so right now, what we're pushing is the use of the app on their own. So it's on the payslip and so on, but we are doing a push at the end of this month, which will be, so we've used the email and the cell phone and so to spread the word and the payslip, but we're gonna send out something else at the end of this month to make it a little broader in terms of the approach. All right, excellent question.
Yes, and we had another question.
Yes, over here.
No, we had this one first, and then, where's the other over here?
To your left.
Okay.
Okay.
So we're gonna have this question first, and then you.
So I'm piggybacking on the gentleman. Hi, everyone. My name
Hi.
is Khalees Bradshaw Davis, and I'm the Assistant Director for HR for Ernst & Young. So I have a grandaunt who is 106. She does not own a cell phone. She does not own a computer. I'm pretty much her right-hand person. I think we can also look into having contingency plan if it means having persons who they have delegated to act on their behalf to get their information and their facial recognition to kind of help. Because it's a bit hard to leave from where I am to always go to her when it's needed. She also moves around a little bit in her little wheelchair. So we can think about that. You had also raised the thing about increasing the pension amount. Now, as HR, my chair is called the wellness bench. And oftentimes when you see persons come in to say that they want to defer their voluntary amount, etc., because of whatever situation that occurs, it's very hard to have that discussion. I don't know if we want to look into, similar to your life insurance, where you have a plan that has a saving component and investment, etc., because oftentimes persons cut the amount to deal with that one-off emergency, and sometimes they don't recover depending on the type of emergency. So I think having a savings component, that's just my opinion. I mean, you guys are the expert, but having something that persons can borrow against without having to touch is a good relief. Another thing I find is that the younger persons who do come and work, they have a different mindset when it comes on to retirement plan. With the age of technology and the purchasing of land and now doing the whole real estate investments and all of these things are looking a little bit more lucrative than taking out the 5, 10, 15% out of their salary. So you find that they tend to be a little bit more of the high risk versus those who are older, who wants to just, play it safe. And then you have the ones whose kids are already finished with university, so they quickly opt it when they realize that they have 5, 6 years left before they're retired, and so they up their amount. So I think it has to be a case where Sagicor look on a good campaign for the younger generation to really understand the benefits of the pension, and even though there are other options to make other retirement planning investments, that they really see this as something that is important, because many of them still don't trust it. Many of them still don't trust certain aspects of it. But apart from that, I commend everything. I like the fact that you've taken away most of my paperwork. Yeah. So I think those two things are something that you can look into, having that contingency plan for persons who have to act on behalf of the older persons that they sit in. Yeah. I don't mind having my facial recognition for her, but you have to look on other aspects of things, and looking on how to alleviate the weather when persons do face the hard time, so that they don't have to cut down on their pension amount.
Okay, thank you so much. And you've made some excellent points and questions. If I could just try and address them one at a time. So you mentioned the power of what we call a power of attorney, where somebody has a legal right to act on behalf of another, like a pensioner. So we have a number of pensioners like that, but they really are in a minority right now. So we had actually made a decision to move forward with the majority of pensioners at this phase, but the next phase will include a power of attorney option. So you could actually validate on behalf of your aunt, but we would still do a back-end check with Registrar General's Department, just to make sure that she's still alive, as a additional check. So we had them in mind, definitely. We have our extreme seniors who are somewhat debilitated. We have them in mind, just we weren't able to address them in this phase. So for now, if you were able to just hold up the phone to her face, so we could get the selfie, and you take a picture of her electoral ID or any ID that she has, and we can do the match. But if you can't do that, then just reach out to us and we will accommodate the paper, given that it's a power of attorney situation, and obviously there's a need there. All right? Now, I'm happy you mentioned about the fact that people have need for cash, right? So Neil actually has a team of persons who go to, it's called financial wellness program. They actually come to your workplace and talk about not just pension, but other savings options. So people can actually save in those mechanisms for the rainy day and not stop the voluntary contributions as their way of getting that extra cash back. So I'm not sure if y'all are aware, but we do have that right now from at least 2 years ago, formally. It has always been in place, but on a formal way, Neil and his team actually does that. So just call him and we can come in and do a proper program with you. Set it up. We have people from Sagicor Investments, which is our sister company, that actually come in with Neil and help people to sign up and figure out what they can afford at the end of the day, kind of work through what their budget would look like and help them to come with a meaningful and a reasonable number in terms of what they could actually save on a monthly basis. And finally, your mention about the younger people. So the young people have always been a challenge because they really don't think they're going to get old, right? And I'm saying this because we've talked to them. So we actually had a focus group. I don't know how much time I have, Kadia, but just bear with me. All right, so we did a couple studies, right? We did a study on people who actually buy a retirement scheme, like from Magda, right? To see what makes them buy a pension, right? And the BI team actually built a profile from these people and realized that they're over age 43, they have a family, they have life insurance, their salary did not matter, and their gender did not matter. right? So clearly it's a matter of priority because they have a family and they, they're at a certain age now, 43, when they're kind of looking towards retirement. So we kind of have a good handle on what to do to make pension attractive to somebody in that group, or maybe just below that group. The people that seem to be elusive are the young people, because we've done a focus group, we looked at those young people, and we asked them, what stands in your way? First thing, we can't even use the word pension when we're talking to them. That's the first problem. We have to change the language altogether, right? The second thing is, they don't think they're going to need a retirement income because they're going to all be doing a business of some sort, right? But I always say to them, think about it. A lot of businesses start, but not all of them stay, right? COVID is a typical example. COVID come out of nowhere, and the shop used to have down the corner there, you don't have it no more, right? The girl used to sell clothes, she don't do it no more, right? So I don't have a problem. Everybody, I love entrepreneurial spirit, but it can't be one or the other. You have the pension, and then you have the entrepreneurial as well. You understand? You shouldn't have to choose and say you're not going to save in a pension plan because you're going to be an entrepreneur. A lot of businesses fail when the owner gets sick. So if the business is riding on your back and your energies and your business go down because you're sick, what happened to the business? What happened to your income? So it doesn't have to be one or the other approach. We can do all of them. We can be a star entrepreneur, but we can save in the pension plan to the maximum that we can. In an employer superannuation fund, or we save in a retirement scheme. So somehow we need to get that message across to the millennials and the Gen, what would they know? Z and the, and the Alpha, because they don't think they're going to get diabetes or arthritis or glaucoma or anything. You understand? They're going to be healthy till the day them die, or them not going to die at all, or age. Because, so, I don't know, y'all probably have to help me to figure out how we can get to this group for them to understand that we don't see ourselves as getting old, but we're getting there. We don't recognize it because, we kind of have this built-in, thing that we don't think of ourselves as being old. But we're going to get there once we're alive, so we have to put the money in place, and the younger the better, right? So to me, the young people have the advantage, but it's just to get into their head that it's okay to, be entrepreneur star, but you want to be in a pension arrangement too, I don't know if I addressed your... Yes, Magda?
Wait,
Yes, I'm sorry to...
Magda,
yes.
1 second. This lady, we've been just passing her over, so if you could just take her question and then take my
Sure.
question. Last questions.
I'm glad that the other two speakers mentioned about the 30%, because from you mentioned the 70% of persons who you're catering to, and I didn't hear you address the 30. I had it down. So I think those persons were peeping in my notebook. But anyway, there's another question. I heard you mention something about 75% for the replacement ratio. Was that what you said as the maximum?
Yes.
The maximum under law.
Under the law?
Yes.
Is that accurate?
Yes. Yes.
So if I increase my total deduction to the 20% under the law, it can never go above the 75% for the replacement ratio?
If you've been in the plan for long time, 37, 38 years, 37 and a half years, you've been saving the maximum from the very first day you started working, you could actually get up to 75 or above.
Yes.
Corinne, is that good enough? But what happens if you go over the 75 is that we can actually start increasing your pension using that extra pot of money 1 year after you go on retirement. So we can actually use it to augment your pension. So you get even a better pension. Obviously, I think you can actually get a refund of it minus the tax, but because of the 25% tax, we don't encourage that because you're losing quarter of your money.
Yes.
So you might as well put it to a retirement benefit and top up your pension. So that's how we approach it.
Yes.
Okay, thank you.
All right, I was going to sit down and don't say anything, but you know me already, Latoya, I just had to say something. And I really, really want to encourage everybody, especially if you have young children or teenagers. Remember, the children of Israel took 40 years to go from Egypt to Canaan, and it was an 11-day journey. We need to remind our young people that it's not 11 days to accumulate the capital to give you a guaranteed lifetime indexed income through a Sagicor annuity. I think when we can communicate clearly to young people how it goes, And when we can give them examples of annuitants who are successful versus those who are not, and what was done in terms of the sources of retirement income. And if you all want to hire me to come in and speak in your companies, please do so. I'll be happy to do that. Very happy to do that. Magdalena Cooper, the news. Ask Latoya my number.
Just stick up in there, Magda. On that same point, we actually have an interview on the Pension Hub, which was done with 3 persons. One pensioner, I believe it's 2 or 3, Bridget. There's a pensioner who did not save voluntary. There's a pensioner who did save voluntary. And both of them were interviewed. And they talked about, quite frankly, I think it's 3. They talked quite frankly about their experience and what the mistakes they made and what they did that, they would have corrected if they could have, knowing what they know now, right? I think we interviewed our oldest pensioner was 94 years old at the time. I think he's still alive. And we interviewed somebody who didn't pay voluntary and somebody who did. And when they speak very openly and candidly about their experience and what that voluntary could have made a difference in their lives and what it did for the person that did, I'm telling you guys, it's chalk and cheese. Now, this collateral is on that Pension Hub. We sent it out a long time ago. You might not remember it, but it's there. So when you get the link, you can hop on and you can send it out to your members. So they understand that. So even without, Magda, necessarily, until you would have access to that information right now.
Yes, so what I really want to close with, remember everybody, especially those in here who are HR, you have a responsibility, I believe, and being somebody who has been in the business from since 1985 with my hair down at my shoulders and looking young and sexy, and then getting old and finally realizing that I'm 71 going on 72 and retired and still working, it's important for us to teach the principles of retirement financial planning. Doesn't matter how old you are, the principles. And the main principle is stick with Sagicor, take your annuity, take a guaranteed lifetime indexed income option, because when you do that, they haven't paid me to do this, by the way. I'm just telling you. They haven't paid me. Ask Latoya. It's very difficult to pay me to say these things, right, Mr. President? True. Very difficult. You can't pay me. So once you know yourself and transfer the information to each plan member that they're in the plan to develop capital, which will give them a guaranteed lifetime indexed pension payment, which is from a Sagicor annuity, they will pay 20% or more to save for retirement. Thank you.
Thanks, Magda.
Thank you, Magda. And thanks, Latoya. Please give Latoya another round of applause for that great presentation. And I see Magna volunteering to do the video for the retirees, and you wanted a focus group for the young people, the millennials. Over here. So we still have 2 quick questions. I'm going to come over here for the questions, because over here, I never win nothing. No, and only did well want to win something, Okay, what is Sagicor Plus? Who can tell me what is Sagicor Plus? You say you're ready, you're not too sure the question,
Yes, it's a face recognition program.
What's your name?
Debbie Ann Kennedy from the Scientific Research Council.
Wow, Debbie Ann Kennedy wins a prize. And for our online who said that their questions were too hard, something is being launched. A hub is being launched. What is the name of that hub? Please, for our online participants, there is a special gift for you. A gift certificate from Gift Me. So please look out in your email for that gift. Everybody knows say we never get a gift too. We don't get gift. So we got gifts in here. So a moment ago, a door opened and some persons came out with napkins, a little bread, and I saw all the faces go, yay, yay. So just before we wrap up, and please, during lunch, we're going to be entertained by the Seasons Band and Andrew Casanova. But right ahead of our entertainment, we're going to have our vote of thanks from Nicola Leorini, who is Vice President, Employee Benefits, Sagicor Life, Jamaica Limited.
Good afternoon, everyone. Well, as the last person up, I'm well aware that right now I am the only person keeping you from lunch, so I promise to make this quick. So in the interest of time, all protocols having been established, I'm going to get right to the meat of the matter. It's great to see you all here today. I've seen some friends that I haven't seen in quite a while. Certainly refreshing to see that some things don't change, and after all these years, Ed is still collecting early bird prizes. So, congratulations, Ed. All right, this exceptional and informative event has been a wonderful experience, and we owe it to several individuals who contributed in various ways to ensure that today's agenda ran smoothly. Our keynote speaker, Mr. Gregory Fisher, Managing Director and Head of Emerging Markets Fixed Income Sales at Jefferies Group. On behalf of the Sagicor team, I want to say thank you for the insights and industry knowledge shared with us today. We appreciate you accepting our invitation to speak today, and we have surely learned a lot from your presentation. Thank you, Mr. Jeff. Mr. Fisher, I would also like to say a big thank you to all the other speakers who addressed us today. Our Master of Ceremonies, Rochelle Cameron. You were effortless and controlled the agenda with ease and humor as always. Mr. Christopher Zaka, our Group CEO and President, your words play a huge role in how we view pensions and how important our trustees and members are to us. The Honorable R. Danny Williams, our distinguished PIF Chairman, though you were not able to join us, it was a pleasure hearing your warm welcome through Mr. Mark Chisholm, who did a wonderful job of sharing with us. Also, a very special thank you to Mr. Peter Melhedo, Sagicor Group Jamaica's chairman, who also gave a very well-received address. Thank you to our Sagicor Investments team, Neil, Robert, Donnet, for their insightful presentations. Your economic review and investment strategies for the year to come were thorough and informative. Each attendee will leave here today more knowledgeable about how Sagicor is able to secure their future. To the TELUS Health team, Sagicor Group Chantal Davis and Ben Rapp of Securis, thank you for the informative insights on the Data Protection Act in relation to pensions. To Mrs. Latoya Mayhew Carr, a very heartfelt thank you for sharing your expertise with us as usual. Your in-depth presentation on pension administration and the upcoming initiatives provided valuable information that will continue to enrich all in attendance today. To the planning team, the hard-working planning team, we thank you for your dedication and commitment to making this a successful event. I would also like to thank the Jamaica Pegasus Hotel for hosting us for the 2023 Pooled Investment Fund Seminar. And lastly, to our wonderful clients who show support through your presence in person and online, we thank you. This event would not have been the same without you. So we invite you to stay for lunch and wish you all a great rest of the afternoon. See you next year.
so in love with you. Whatever you want to do is all right with me. 'Cause you make me feel so brand new. And I wanna spend my life with you. Let me say that since we've been together, oh, loving you forever is what I need. Let me be the one you come running to. And I'll never be untrue. And baby, let's stay together, loving you whether times are good or bad. Just whether times are good or bad, happy or sad. Why somebody our people break up, oh, then turn around and make it. I just can't say, 'cause you never did that to me. 'Cause being around you is all I see. Yeah, baby, let's stay together, loving you whether times are good or bad, happy or sad. We ought to stay together, loving you whether times are good or bad, happy and sad, good or bad, happy or sad, good or bad, happy or sad. Good morning, Sagicor. How are you feeling this morning? Everybody feeling all right? All right. Just gonna do a few love songs for you to start it off. Hope y'all remember this one. This is one of my favorite songs of all time. I've got sunshine on a cloudy day. And when it's cold outside, I've got the month of May. Well, I guess you say, what can make me feel this way, my girl? Talking about my girl. I've got so much honey, please help me. I've got a sweeter song than the birds in the tree. Well, I guess Now this next one is a very popular song done by the man Mr. Ben E. King. For those of you who can remember, feel free to sing along, all right?